Good morning, ladies and gentlemen. A new day. It's a new day. Good morning. Mic check, 1, 2. Mic check, 1, 2. Good morning, Trader Joe. Good morning, Dijan. Good morning, Abby's Options. Good morning, Nova. Doppler. Astro. Albert. Trippin. Morning. Morning, Hoover. Morning, Sam. Oh, my coffee's really sweet today. Ugh, almost too sweet. All right. Sound good? Sound good? Okay, cool. Okay, so we got Jerome Powell coming out today, talking. We got Jerome Powell coming out. I don't know. I'm not really concerned too much about what's going to be said too much. We'll probably put it on if I'm still around here. We'll probably put it on, but we'll see how the market responds to any words out of his mouth. Out his mouth. That's going to be happening. It's going to be happening today at 10:15. 10:15. What is he talking about? I think it's going to be at the Washington Forum on the. Wait, no, that says live now. Please stand by. Wilson Center. Something to do with the Wilson Center. Canada Institute Flagship Economic Initiative. I don't know. That's what the link's bringing up. So we'll see here what that's about. Okay. We'll take a look at the markets here because the market's been selling off. We're not too far off of the weekly expected move, which it does seem like we want to go down there. We'll take a look at these gamma levels, see what the range is for the day, what the market's pricing in, not only from a gamma perspective, but from a daily expected move perspective too as well. So let's go ahead and hop into the bigger screen. Ah, yummy. It's actually too sweet. Anybody trading this mess today? All right. We'll start off here looking at the market net flow for the day. And what do we see? We see a lot of chop. Right out of the gate, chop. We had bearish divergence, bullish divergence. Now we have a bullish divergence, but it's been grayed out, which means we have no convergence. So this means no edge, a lot of confusion, a lot of chop. We could maybe see things straighten up a little bit after Jerome speaks, maybe, perhaps. Maybe it's the market just settling into that event. From a gamma perspective, so right out of the gate, there's really no edge there. From a gamma perspective, there was a pretty clear and decisive range today for the 0-date levels in the early trading session. That was 50.15 up to around 51.10. And we've been in that range for the day. As far as local support, local resistance, 5100 is the local resistance. 50.50 would be local support. That's been holding this little green line, little red line right here. A lot of chop. Market net flow is telling us that, so don't get your head, lopped on, trading this back and forth. We'd want to see more of an edge. I think that there's still a strong possibility that we get some sort of strong move in the very near future. We're going to talk about where we can potentially see bounces. Given the context of where we are right now, if you look at the SPY, this is the SPY on the 15-minute time frame. You have the RSI that is building up somewhat of a positive divergence, getting a little extended from the 5-day moving average. And if you just look back through history, you've seen when we get sell-offs, you get bounces back, you get sell-off, bounces back, sell-off, bounces back, sell-off, bounces back, sell-off, bounces back. And we got a sell-off right here, and we're nearing the weekly expected move. Do I think we're going to come straight down here before bouncing? I don't really know. I would have preferred, a stronger gap down today into around these levels to really kind of scare people and then look for strength after that. That was what I was looking for, but we didn't get that. Now, what are we doing? We're just literally unchanged on the day. We have yet to tag the week-to-date expected move, week-to-date anchored VWAP. The daily expected move is 499.48. The upper daily expected move is 509. Now this area in here, if we do get some, stronger sell-off here, it feels like we can potentially bounce right back up to this prior area. But if we do get stronger selling into here, we have the NVIDIA gap, we have the lower daily expected move and the lower weekly expected move.
To the European cash equity close. FTSE 100 down about 1.8%, the DAX down 1.5% along with the CAC Quran.
What's up, Karen? What's up, Paval? What's up, Vin? What's up, BD? Good morning, good morning. What's up, Ruben? Pablo? John DeVita, Mike, 1329, Tease Trade. What's going on? What's going on, everybody? We'll pull up some of these names that y'all mentioned here in a moment. IWM tagging its lower weekly expected move. Seeing a nice little bounce, huh? We'll pull that up too. Getting a little bit of relief right here after this selling, but really we're just kind of going sideways here. Let's take a look at NQ really quick. NQ is roughly around highs of days. We're trading above the swing high anchored VWAP. You can see we got back above it right here. It's been holding as a level of support, and we're moving from that area right now. More above the opening range. So that's a positive sign for the market. Positive sign being out, above that opening range. However, I believe ES is actually not above its opening range. If I look at just like a minute opening range, yeah, it's still below it just for the first minute of trade. So NQ is holding up a little bit better from just the opening standpoint of the market. Dow Jones is up 0.31%. We had some earnings report. We had UNH show up and show out. Big earnings move there. We had Bank of America earnings, Bank of America, and that one does not look good. Right, some of these banks are getting hit. As far as the 11 sectors that make up the S&P 500, XLU, XLRE, XLE are at the bottom, and those are really rate sensitive. So what you want to do is just take a look, see what rates are up to today. Pressing higher, another high for. I'm gonna go to another high for the 2024, almost 4.46, almost 4.7%. These things are moving. Let's take a look at the dollar. Dollar continues to press higher too as well. These are all things that can put pressure on these markets, and that's kind of what we're seeing. If these start to back off, right? We were talking about correlations with the dollar in the prior episode, in the fishy episode. Something smells fishy, right? Like 2 days ago, or 2 trading days ago, so last week. And what we started noticing is the dollar correlation from the very short period of time is starting to go negative again, but it was lighting up green, meaning that it was a positive correlation. But now the shorter term is showing us a negative correlation again, which tells us that things could be going back to what they usually are. Sam, young one's doing well. Young one's doing good. Eating some food right now, some whole food. I think Dr. Watson. Morning, Dean. Let's take a look at gold, silver. Hi ho, hi ho. What's going on here? Gold's still moving. Gold is still holding really. This is pretty crazy to me because gold is still holding really up really well, even despite seeing a pretty strong dollar. Silver's backing off today a little bit. Then we have the big moves in like Bitcoin, right? We had our sell signal, sell trigger occurred. So if I look at the weekly time frame, I don't go off Bitcoin futures really, but we did crack, and we did have a sell signal, sell trigger, and it's kind of breaking from this contraction pattern. It was looking really good. A lot of these names, everything was looking really strong. But when you're in a negative gamma regime, when you're in below a declining 5-day moving average, this is just kind of what happens. So let's take a look at some of these daily time frames. SPY sitting roughly at about, we've came about down 4%, so not even a 5% move. A little bit lower right here is that NVIDIA gap. All right, that's where we gapped up on NVIDIA earnings. And then as far as like even the monthly expected move, we're trading outside of what the monthly expected move is currently for the S&P 500, I believe. I'd have to pull it up, but I'm almost certain. So to see a little bit of a bounce back here in the near future makes sense. Maybe we can pull back in a little bit more and offer up a little bit better of an opportunity. But that would be a level that I'd be focusing in on. This gap fill, even right where we currently are, this kind of this area right here. You know, we're you know, this little zone right here. And that's kind of where we pulled back into. I think I don't think that this means that it can't go down further, but you know, when you see these strong moves to the downside, typically when you have higher rates of change to the downside, it's followed by higher rates of change to the upside and vice versa. If you have a high rate of change to the upside, you get a high rate of change to the downside. It's just when you're in more volatile times, you see bigger moves to the upside, bigger moves to the downside. It's quite normal to see that kind of stuff. So some of the names that you guys wanted me to bring up, I'll pull up a couple of these. BA, Boeing coming into earnings. I don't establish new positions going into earnings, and this has been an anchor everywhere. So yeah, you'll probably get a bounce here in the near future. But into earnings, I don't really mess with that stuff. What I'll do is like very similar to like UNH, right? UNH, big move up on earnings. It's unfortunately in a downtrend, but what I would do is if it was in a more of a positive trend, I would look for consolidation, 5, 6, 7 days, couple of days, who knows, inside trading days. And then when it's strong, it typically gets followed through to the upside. So I've done that in things like Disney, Target, would be a couple of them. So Tesla.
1 year bill bid to cover ratio 2.88.
In order to cover Tesla, we need to be in the Tesla truck. So Tesla just consistently getting smoked. Yeah, this one's also probably due for a bounce in the near future, but we have earnings around the corner. So you're playing with fire here. Maybe you know, we're estimating what earnings is going to be. Maybe earnings comes out and then we gap ourselves up. But earnings coming up in, what is it, next week, right? The 23rd. I mean, we're looking at roughly a $17 expected move. So now from where we are, I mean, that could bring us right back up into this range up here. Overall, though, when you look at this, it's like, you know, bad trend, broken, you know, flag, wedge, whatever. Then we also broke down from this little bear flag right here. And we're getting some follow through, like chopped around, but then we're getting some follow through to the downside. So I don't know. And then you go to the weekly time frame and you look at this and it's like, it looks like crap, right? It hasn't been anywhere since, you know, it's going back to like, I don't know, 2020, November of 2020. We are pulling into this prior area where we found some support. What is that? Kind of this area right here. So we're pulling back into this. So yeah, I mean, sure, we can get a bounce. Look at this kind of like pull down here, and then this. See how this is tightly contracting, kind of this wedge pattern right here on Tesla. We'll zoom in a little bit more for it. All right. Let me see if I can draw it out better. Kind of this wedge pattern taking place here as we're pulling into this. So we have some confluence between this lower trend line, right? This lower trend line and this also here. So yeah, if we bounce, I mean, but we have earnings, unfortunately, right? So we have this price action going lower. We have a positive histogram on the MACD. Perhaps it might cross over. This is the weekly time frame, by the way, but it's a horrible trend. So even if you bounce up and it comes all the way up to 200, 210, whatever, you're still bouncing up in a downtrend, and it would be a lower high. So when that's the case, you got to be a little bit tactical on how you approach this stuff. One way you can look at this is maybe if we undercut this and go for a U-turn and turn back up. All right, or if you're entering in, right? If you're entering in now on this like potential capitulation move or whatever, you can have a stop under the low of the week, and if you get stopped out, it is what it is, and you can wait for a turnaround and so forth. So if I go to the daily time frame and I look at this, I mean, look at where it bounced. It literally bounced right here on these areas. Right now we're at highs of day. So yeah, to come fill this gap, maybe potentially move further. The path of going higher might be choppy. It might go like this. Who knows, you know? But yeah, probably due for some sort of bounce in the near future. When Apple did this kind of wedge pattern similarly, it got much tighter on the daily time frame, and this entire move has been faded. That's kind of what we said, like, you know, the move was made, don't chase, wait for consolidation, and nothing from a fundamental perspective really changed here. And we sold it right back off, right? Contraction leads to expansion. The trend, when you get this move up higher, what's it do? It just creates another lower high. You know? And this doesn't mean that it's going to head lower. It means we can just chop around or maybe even bounce back up. Let's take a look at IWM. Yeah, IWM cracked this lower trend here. I was kind of watching this and then all these little wedge patterns that were forming. So this little channel. So yeah, same here. Getting a little frothy to the downside. We're at roughly the highs of day. So yeah, it's in order to, these are, we're going to see bounces. We're going to see bounces here. When, I don't know. Just be careful, because when you're trying to buy the dip and you're not, when it's breaking key levels, when you're trying to buy the dip and it's breaking key levels, you got to understand that the approach to your position sizing is way more important. Okay. And then how you manage your trade is also incredibly more important, because the trends are breaking, you're getting more volatility, and you don't want to just let the trade go against you for too long, because these can just produce bounces, and it's once again a lower high. We don't know if that's going to be the case, but we haven't seen a higher low in some of these names yet, and then a higher high, right? We haven't seen that yet. We're just seeing a straight move down. So it's all about the approach. Oh man, I'm in my Cybertruck. Okay, there we go. Not in my Cybertruck no more. GGO. What's GGO? Not loading on my end. SoFi. Yeah, so for me, I personally like, I would like to see price action get tightened up, but you look at this on the daily time frame and it's literally just popping and dropping and popping and dropping. There's no trend whatsoever. You can tell that by the moving averages going sideways. And then we have earnings also right around the corner. So in these cases, like, okay, earnings is 429. Like, I don't want to establish a new position in something like this that just doesn't really have, I mean, yeah, okay. Oh yeah, could we bounce? Could we break lower? It's literally anybody's guess right now. Right? It's quite literally, because there's no real nothing, no real trend. So when I look at the weekly time frame to maybe hide some of that noise, you get this strong move down, small consolidation, and we're breaking down lower, following through from the low of last week. Right? Strong volume, lighter volume on the move up, and then we get follow through on bigger volume here, and then we're following through. So, and then you're below all these key averages, the 40, 30, 10 week, and they're all stacked up against each other. So really you'd want to see price back above. So maybe if earnings does something positive, maybe if earnings does something positive and we get a nice big move, you can wait to see if it consolidates and at least have a little bit better risk management perspective there. That's kind of how I would approach it. Walmart, which is known to be kind of more of a defensive name. Walmart's pretty interesting to me because Walmart went a little too far too fast, in my opinion. And I feel like the consolidation could lead to a while. So this day right here was earnings. And pretty much after that day, I even had friends reach out and say, I think I'm going to go long Walmart. I'm like, yeah, I mean, I get it. I think that I can even pull up the test. I said, I think that there's more upside here, but you're probably going to go through a longer period of consolidation. And really, since that day, we're pretty much in the same exact place. I don't know exact entry or anything like that, but we're in the same place. But the crazy thing about Walmart is, like, we came from a low here, to a high, December, January, February. I mean, just in December, January, February, 3 months or so, it went $10, and you can go to that trade tab and you look out for $10. All right, you got to go out to March 2025. That's like almost a year away. So this move right here that we did in 3 months typically can take us in a name like this, it could take way, way longer. So these type of things throw up not necessarily red flags, but it is, a data point that should be considered. And the reason why I think that is because is it going to make another $10 run, in 2 months? Probably not. Probably not. No, it's probably going to have to go through a period of consolidation. If we go back through history, Walmart is known to go through these periods of consolidation, right? Let me look at from here, June to December, right? 6 months sideways, maybe even longer if we pull up the weekly time frame, right? You go here and it goes all the way out, boom. And then we're seeing some strong follow through. So yeah, there's always potential for it to go higher, but also it's made a pretty strong run. So now it's a time to watch to see how it consolidates, contracts, and so forth. And we're seeing a little bit of that volatility since that earnings move. To say, and remember, strong stocks typically get stronger. So if you thought this was the high, you were wrong. If you thought this was the high, you were wrong. If you think that this is going to be the high and we're not going to crest that high again, I mean, the probabilities based off of trend following would suggest you are incorrect. It's going to go higher at some point. But me, I don't know if I just enter in knowing that. I have to wait for some tightness, right? So we are getting a little tightness here, and then potentially a break of some sort. So you can see right here, right? We're holding this little trend and this trend right here. So price action came up and now we are consolidating. We are kind of tightening up here. Okay. So if it breaks back up above the 20 and this starts turning around, you can have a nice stop to potentially target this or higher. But if it breaks down, you got to at least respect that. Yeah, so we had J&J report earnings too, I think, right?
Adidas releasing preliminary figures better than expected, raising their guidance. ADS in Germany.
Adidas. Mike's cycle lost 7K because of that. Sorry, I missed which part. Hey, Mike, which because of what part? What was I saying? That what you were talking about?
5.46 billion versus 5.27 billion year ago.
Fed is going to be talking at 10:15 Pacific Standard Time. It's about an hour and 30 minutes or so. So J&J reported earnings. This is a bearish earnings gap, so you want to see where this finishes. But typically, right, if you get a bearish earnings gap, just like if you have a bullish earnings gap, you could get continuation to the trend. Now, this is gapping down already after selling off. So, you can see drifts up higher, but just remember how, what happens. So you get a big volume day to the downside, maybe it drifts up higher, but then all of a sudden volume steps back in and you can have continuation. So J&J is coming into, it's breaking this low. I mean, this is a new 52-week low. New 52-week low. You can see we have strong moves to the downside, strong moves to the upside, strong move to the downside, strong move to the upside, strong move to the downside. Probably have some sort of a bounce, but just note that that looks like it's just a big topping pattern here. Just know that watch the volume, because a bearish earnings gap and then all of a sudden we drift up higher. Is the volume going to start contracting and getting very tight? And then all of a sudden, people are going to say, oh, it's bouncing. Yeah. But then is it going to break higher with substantially more volume? And we see the same thing in the flip side of this happen all the time, literally all the time. Like Disney, right? Bullish earnings gap, pulls down, boom, we move up higher, right? That's the one that I traded. Target, right? Once again, boom, powerful earnings gap, move, pulls down on declining volume, boom, we see the pop up higher. Okay? It works both ways. Oh, not keeping tight stops. Yeah. Hey, and you know what, Mike? It's crazy to think, because if you go back through, and you'll see this. Yeah, this goes to everyone, but if you go back through your prior year of trading or this year of trading, and if you could just remove your two worst trades, do a calculation so you can really visualize this and see what it does. But if you take out your 2 or 3 worst trades, how does your P&L change for the entire year? Right? In a lot of cases, it's 2 or 3 bad trades where you just kind of let go, you let loose, and you let it go, and then all of a sudden that destroyed your overall P&L. It's like a couple of trades. And if you just said, hey, I didn't do those, all of a sudden your P&L is way better. Yeah, that's how much you have to focus on risk, because it could be one trade. It could be 1 trade, 2 trades, 3 trades that literally take you from 30% up for the year to flat, to down, or 10% up on the year to negative 20% on the year. You know, you don't know.
Reporting Q1 revenue of 20.7 billion.
Yeah, I'm sorry to hear that, Mike, man.
3%. MC trading.
Yeah, that's a tough one. Slow, steady, grind back, keep focused. You know,
20.7 billion in revenue.
Fight the urge to do revenge trading. It's, you know,
consensus estimate.
I've been there before. It sucks. It really does. And it takes a long time too to build back.
Wine and spirits organic sales were down 12%.
All right, so what we're doing right now, we're just kind of we're just floating up a little bit higher right now. But the candles, if you look at these candles,
2% organically to 10.5 billion.
And we get a big range candle to the downside, and then we kind of just small range, like bigger range, you know, smaller range, tighter range. Notice how it's just kind of tightening up and floating higher. I don't like that look. I don't like that at all, because then you can get an expansionary candle to the downside. But we'll see what market net flow is telling us. It's not telling us anything, so never mind. But NQ being up at the high of day, I mean, or roughly around the high of day, did put in a lower high. And we're kind of just, yeah, this is chop, people. This is chop. Not much more than that. It's just chop. Perhaps things start getting going when Powell talks, maybe. Middle East tensions escalate. What industries or sectors would be affected the most?
In Q1,
I mean, we've seen commodities, oil,
7 million.
And we've seen things like gold move a lot. Excuse me. And then we've seen like defensive sectors, defensive names. So aerospace names. I don't know, RTX, NOC, LHX, Lockheed Martin. We've seen some big moves in those. I don't know if that trade is still there or not. Everyone kind of sees it.
They're back saying they expect 2024 revenue to be up 4 to 6%.
Is that Henry? We'll pull back up AMD. Yeah, Apple's getting destroyed today. Okay. Yeah, let's look at AMD. What's up with AMD today? I mean, AMD's still within this little tight wedge pattern. I feel like if we do get the bounce, I mean, just I feel like if we get the balance, just you know, you got to be kind of aggressive with it. But you get these big volume bars down to the downside. You get these tight consolidations, and you can follow through with big volume too. It's like all big red flags, and you know, it came off pretty hard and fast from this prior swing high. Qs came in within 1 penny of the year-to-date anchored VWAP. Let's pull that up. That's pretty crazy. Let's go daily. And that could act as a level of support, people. So you go Qs. Look at when we break these steep trends, you go into periods of consolidation. I think we talked about that in our prior video. Forgot that was there. Let's go year-to-date anchored VWAP. Yeah, we're right there. I'll take off the month to date and week to date. Yeah, I'll just leave them on there, whatever. So this was where the year started, okay? And we did this little U-turn through it. We held it. And now what are we doing? We're trading right back at that year-to-date anchored VWAP. We actually crested into it now, I guess. Maybe that happened. Or maybe it's just a different data read. I don't really know. But we basically tagged it. Price came in hard and fast at the year-to-date anchored VWAP. Now, this is crazy to me because remember, we've been up all year. So the average buyer based off of volume and time, right, would be in the green. So what happens if we start breaking below these levels? Well, the average person based off that time and volume would be in the red. And you can get like some pretty strong psychological shifts when that happens. That's why even on a daily basis, if you're looking at the daily VWAP, sometimes when you get above the daily VWAP, it could be pretty bullish, right? But then when it gets below it, you can see big flushes. Same thing here. But now you're talking with more volume, more data. We'll pull up Lulu. Are we going to see Powell pop some balloons? I don't know. I have no idea what's going to be said, what's going to be asked. I have no idea about what to expect from today's thing. I'm just going to be watching that kind of price action, see what happens. Lulu, I'm interested in. Lulu, very, 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 very tight little wedge pattern that's been selling off like crazy. I think you've had to be very patient here. And now we're seeing, you know, some weakness, and now we're right about the highs of the day. So to see a bounce here in the very near future, this to me looks like something we can watch for. If you go back to the left of the screen, this is coming into price action where we saw a prior earnings kind of gap up. So this could be a level, you know, you fill this gap. We haven't filled this gap forever. We basically did it. Maybe it's a little bit lower would technically be the fill. So yeah, these little levels can produce potential bounces. Yeah, so Lulu's been on my kind of radar here really since and this was a bearish earnings gap. So this is another thing to somebody who said, you know, was looking at earnings. See how we had a bearish earnings gap? Well, I mean, people were saying, oh, should I buy the dip? Well, no, you shouldn't have bought it there. I was asked about the dip right here. I said, well, if you're going to buy the dip, make sure you respect it if it breaks lower, and it broke lower. So if you buy this dip, guess what I'm going to say? Respect it if it goes lower, because, you know, it could get weaker, weak, right? You get one wave, two wave. This was probably could be potentially named the third wave there. And maybe it's due for a little bit of some relief. And it's a high beta name, so, you know, make sure you calculate that into, you know, into your position sizing. If you take these type of like aggressive trades, which they are aggressive because you're buying into a deep decline, and you have the trend against you. We'll pull up INTC. I can pull up Tesla too. Yeah, INTC, it's the same, like a very similar type of thing. Yeah, we had this big break. Now we have earnings around the corner here, which I don't like establishing really new positions into earnings. We have a little bit of time here, but I'm not much of a fan of establishing a brand new position into. Yeah, Apple was a big move. Apple was a big move. When I looked at Apple, this is okay. So this is why I trade the way I trade. Look at, and I'm out. Like, right? I literally call this out. I don't know if I did it live. I'm sorry, my bad. But I know that I posted the chart somewhere, and basically it was on this day that I posted it. For the next day, said if it breaks this high, and okay, let me walk you through the reasonings. Okay, why would I all of a sudden be interested if it broke this specific high and not any other one really from that point, right? Why that high? Okay, go back to the left of the screen, and where are we coming into? Prior areas where we saw bounces. Okay, what else was happening here? I don't have it on my screen, but we had a positive divergence in the RSI, positive divergence in the MACD. What else is taking place? Price action's getting very, very, very tight here. So it was literally, I didn't know that we're gonna get a pop-up like this. Had no idea. Because on the live stream when this was happening, I was like, holy cow, like this is a very rare move for Apple, and it was a lucky move out of a, you know, tight pivot. And then I took most of my profits on this day, and I really removed, I think I even still have some on that I probably got stopped out today, but it was such a small position left in the position, it doesn't matter. That's why I don't really know, I'd have to go look. Okay. But now, what happened? We just did a lower high. We just put in a lower high, right? And it's fading right back down. So now you got to see if it contracts up, gets a little bit tighter, and so forth. What about HE? What's HE? Hawaiian Electric. I don't know what's going on with this chart, but it's nothing that I want to put my money into. It's a little too scary looking for me. I wouldn't want to short it down here because you can probably get some sort of face ripper, but I also, like, something just seems off on it. Like, I don't like that. I don't like this whole trend. I don't like the breakdown today. I have no idea what this is. Is this have to do with like what happened in Maui? Was that around this time? Is that
for DBG?
Because it says Hawaiian Electric.
Their financial targets on a cyber attack.
Yeah, like look at this. This is scary, man. Like, so if I were to jump into something like this, like, and you can fade it, maybe go to the long side, but it would be literally a 1% position. It would be too tiny for me. And it's not really enough volatility for me even to consider that right now.
are not much different from an earlier offer.
All right, so we're getting somewhat of a bounce here. Great point out there from Trader Joe saying that the year-to-date anchor VWAP from Qs. So we had not only a tag of the year-to-date, but look at where it came from. It was a strong move. So these are, you got to ask, okay, where did price come from? It came from way up here to way down here, and it's holding as a level of support. So this is a positive sign that it's holding right now, right? It doesn't mean that it can't break, but it's positive now. We're at new highs of the day for NQ. If we're looking at ES, where would we target? We're going to target up to 5105 to 5110. Why? Because that's what the 0-date levels were. That's where the concentration was in the early trading session. I think that would be a pretty... I don't think that that's as crazy of a move as what we saw yesterday to go down to 5065 when that level was there all day. That was crazy to me. That was wild. Let's go to the 15-minute time frame of the SPY. And see market net flow if it's making any adjustments, any changes. There we go. This little contraction there, and then we're breaking through that, so that's nice. See how we had this little tight move here? That I didn't like. But as you notice, let me zoom back in so I can walk you through it again. As you notice, you get tighter and tighter and tighter, right? Expansion leads to contraction. Contraction leads to expansion. So whether this looks, bearish, because it's technically a bearish context, it broke to the upside, and we're seeing an expansionary candle with the range, meaning the range is a lot bigger than the prior candles right now to the upside. Now it's coming into where? It's coming into an area where we've had some hiccups. So here, 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 in here, okay? So we'll see how it battles through this. We'll see if market net flow is giving us any insight of anything. Market net flow is not giving us anything today. So let me check 0-date, see if any changes there happened. 5105, 5110 is the same area of concentration. I think that could be the target for today. Now, Jerome Powell is going to be out in like an hour and 15 or something like that. So who knows what's going to be said there. We're flat on the day, basically, right? We're slightly up 10 basis points on the SPY. With a market net flow that's not really giving us an edge, or basically that just tells me we get more chop, people. More and more chop. Let's see if Bookmap has any levels. I guess ES has some level up here at 5150. It's not really anything that I'd pay much attention to. It's only 270 contracts. Down here, though, we got some more liquidity. That's 50, 55, and 50, 50. And we're running into some overhead supply right here. Yeah, so we're running into this little area. Still holding up as a little level of resistance. That's okay, because you want to see actually that. You want to see it come back up and kind of consolidate and get a little tighter here. That would actually allow for a little bit better of a potential little tiny bottom to see a bounce. So we'll see if that can happen. So that was Hawaiian Electric. Somebody asked about Zim shipping. I feel like I was asked about this one not too long ago, and I think we talked about it over here, and I just was harping on the declining averages. So you're fighting a trend, right? We get above it, you get above a longer term trend like the 200-day, but it's still declining. Okay, I don't care that price is above it or below it. Just like when everyone talks about like, oh man, we're below the 50-day moving average. Okay, I don't care that we're below the 50-day moving average. I care more of the trend. It's still up. It's technically still up. Okay. I would care more is if it started turning over, right? And holding actually in the trend started visualizing to see it change or to go neutral and so forth. But really, we're 2 days below it. So yeah, okay, proceed with caution, but it is still turning up. So that you see the shorter term, the 20-day, that's actually starting to change and turn too. That's more neutral And the longer we stay below it and the lower below it, this is going to really start driving down. Okay? But in the grand scheme of things, I mean, it's still up. It's still trending up very steeply, right? Okay? Trends don't go down without a fight, right? Trends don't go down without a fight. So you bounce back up, see how it holds, maybe.
For the treatment of chronic
If it bounces back up. We don't know what's going to happen, but that's how I interpret these things. It's the same thing if I go to the 15-minute time frame, right? It's you get above a declining one that's bullish, but with what? Caution. You get above it, it's bullish, but with what? Caution. Why? Because it's still trending down. It's the same thing if I go back further, right? And price breaks below it, but it's trending up. It's like, okay, be bearish, but with caution, because you typically get rips right back up. All right. Market's just selling off here. So we get this little pop up and it's getting faded. Held up right around here. So this seems like some sort of level that we might want to pay attention to today. It's a little bit of a shooting star candle too on this little, kind of move up higher, contracting, and then it came all the way back in. Still could be flagging now at this point. And then market net flow is not giving us any insight for anything right now. So it could literally be any direction. And then 0 date, we still got the same levels out, about 50-10, 50-15, and then to the upside, the target would be 51.05, 51.10 there. Those would be the bigger levels. Look at this, just completely reversed there. Let's go trade the news. Let's see if there's a big news event here. LVMH, oh, that's just Louis Vuitton, probably reporting earnings. And Adidas. I don't really think that that's going to move the market. This is probably just the chop, the flow. Yeah, so when I'm looking at this, no trades for me. I would be interested if we can get down to the weekly expected move or daily expected move, or even down to this NVIDIA gap to maybe I'd start thinking we can start seeing some bounces in some of these beat up names. No, I'm not doing anything right now, Juan. The Peter Schiff Triangle of Doom. Yeah, I can take a look at EMPH. Google, Apple. SPY 17,690, buy order 17,690 for Qs. Nice. $17,690. Down here? No, even further. I gotta pull up a bigger time frame. Ian, or Kelly, I have a couple different platforms that I use. Yeah, let's take a look at we'll take a look at EMPH. Market's just reversing that little pop. So we have earnings around the corner here for EMPH too. So I don't initiate new positions into earnings. It's looking at like a $17 expected move. Okay, on a $110 product. That's big, right? So we can come down here to 92 bucks potentially. When we I don't know where the earnings expected move is going to be when we get closer, but right now, I mean, that's, plus or minus $17 is a big move. And I'm looking at this and you can see price is getting tighter here and we're kind of breaking these trends. So you get tight, and we started breaking here. But earnings around the corner, who knows what's going to happen. And then the trend, you can see we got above the declining 200-day, right? So it's bullish, but with caution, right? And it fades. The longer we trade up within these areas, it can start potentially flattening out and turning around, just like the 50-day and the 20-day did too. So you got some neutralizing trends here, but then the 200 is still declining. So I go out to the weekly time frame and look at this, and it's like, man, you're really trying to fight a trend here. So even if you break up to the upside, it would still take a long time for this to turn back around. So a big pop to the upside, 160 even. I mean, you can see this thing go like this for a while. You know, you can see it for a very long time. You know, try to flatten out. It's hard to move these trends. And you can get pop. Like, look at some of these moves in here. Some of these moves in ENPH, I mean, just wild. These rips. Yeah, the MACD on the weekly time frame curling over here. Nothing's easy right now. Almost nothing's clear, like very easy clear. I think the big thing here is I've been freaking preaching this back and forth of like what we've seen in the S&P 500. If you look at the SPY, what we've seen, this move here, if you managed to catch a lot of this move, half of the move even, whatever, you didn't know how far and high this was going to go, and you still don't, right? We don't know that. But if you manage to trade with the trend, you manage to accumulate a lot of gains because we've been up straight, right? And because we don't know where we're going to go and how high we're going to go, I consider that to be the lucky part, right? To be able to capture the up capture of all that move. Now, the problem here is people confuse this lucky part of the distance of things that we don't have control of. I consider luck, right? What we don't control of is where price goes, but we can control what we buy, when we buy it, how much we buy it, and when we sell it. So the real skill is really shows up during the down capture phases. It's not about, you know, shorting the market to the downside. It's about protecting your portfolio when volatility steps in. And, you know, you can go to the VIX, and I tell this pretty frequently, like if you look at the VIX, if you have, you know, $100,000 portfolio, I'm just using that for a nice round number, $100,000 portfolio, and you're used to trading with the VIX down here at 13, and for easy purposes, you still have a 100K portfolio, but it jumps up to, I'm just going to go 26 VIX just to make it very simple math. And you still have your 100K, just say, okay, your 100K down here moves appropriately in this type of volatility. But if you have 100K and it's up at 26, you essentially went from 13 to 26 vol. That's 100% increase in volatility, right? Give or take the math, right? Or whatever. That means your 100K is now moving back and forth on a daily basis as if you have 200K, because you're trading literally, you know, that much higher volatility. So you're going to see much more volatile swings. So you need to be able to understand that and adjust, bait adjust, and so forth, right? Yeah, SoFi, I did look at already. SoFi. I mean, we have earnings around the corner here too, right? So, you know, it's a little poppy, jumpy. The first thing I would say is look at the trend. What's the trend telling us? There is no trend. If anything, it's down, but I would consider this more neutral. Just given the context of the lower highs, lower lows, but then we have a little bit of a higher low there, and then kind of like matching highs there, so it's contracting. But then we have earnings around the corner that can literally break this in either direction. So I don't establish new positions going into earnings. Do I think Hood would be a good buy? So this Hood is a great example of what I mean by a lot more fake outs in these market conditions. And this is something that I shared on Twitter a while ago, and on these videos. But from my experience, when you are buying breakouts, because I consider myself to be more of a breakout type trader, sometimes I early entry, but most likely I'm a trend trader to breakout trader is what I do. And this looked like a great little flag right here, right? And we broke out on stronger volume. But here's the thing. This breakout was a lot different than, you know, this breakout was similar to this breakout to similar to even this breakout. This breakout was different. Why was that specific breakout different? Because the actual market conditions differed. What do I mean by market conditions? During that entire time, the SPY was pretty much above a rising 5-day moving average. But during that last breakout, what's the S&P 500 doing? What's the flow of the market doing? We're below a declining 5-day moving average. Okay, but that's just a little piece of it, right? So the trend for the S&P 500 is down. Yeah, that can affect other stocks. Okay, but that's only one piece. Then you look at this and you look at the gamma, and we're below the flip line during this process too. So from my experience, from what I've noticed swing trading, when you are in a negative gamma regime, when you're below the flip line, when you're below a declining 5-day moving average, you're going to get a lot more fake outs. So when I looked at Hood, this little breakout here, we were looking good in the market, good market conditions. Here, not great market conditions. And you get a breakout on good volume, and it breaks back down, and it trips people out. That doesn't mean it can't turn right back up, because it can, all right? But you got to understand the conditions of the market. When they change, you have to adjust. You have to adjust. You have to adapt, because if you don't, another way to put this is, if you have one trading strategy, but you have a market that has different conditions, what makes you think that your one strategy is going to just work in all of these different conditions? It's impossible. One strategy doesn't work. You know, you can create all-weather portfolios, but all-weather portfolios are spread out amongst, you know, multiple different strategies and multiple different assets to weather the storms in these different conditions. You know what I'm saying? So when the market conditions change and you're using your strategy, we'll just call it strategy, whatever, and it's working so great here, and then all of a sudden we switch over to a different market condition you're using, and you're like, dude, it's not working that great. What's going on? I'm going to start leveling up. I want to start adding more. I'm YOLOing in. I'm doing this. I'm doing that. Not realizing that, hey, dude, your strategy actually worked well here. It does not work here. You know, it's not working here. But if you're taking too long to adjust and to figure that out, you can blow yourself up here, or here, or here. Yeah, we can take a look at Nike. Well, I got people from every oh no. Dude, Jalen, are you on both streams right now? You're funny, bro. I'm seeing it pop up in both. It's like, can we check out Nike? Boom, boom, boom. How you doing that? Yeah, so Nike, dude, Nike, I think we literally talked about this a few days ago of what we could see happening. Isn't that funny? Look at, we said Nike broke this trend on the weekly time frame, and I wouldn't be shocked to see it pop back up to retest the trend, but it'd be to a declining 10-week, potentially 30-week, 40-week. So what are we seeing here? We're literally seeing a back test right now. After a bearish earnings gap, you typically get follow through to the downside. So we followed through to the downside, and now we're seeing a little bit of a bounce, but we haven't seen a higher low yet. It's just kind of like going straight up. So a test of this, maybe consolidates, maybe puts in a higher low, but we're still below these, you know. Now I know that Nike's not going anywhere really as a company. I don't see this like, you know, I don't see Nike just going bankrupt or anything like that, right? So sometimes in these like bellwether type names, like big brands names that are, you know, been out here throughout history, yeah, they can come down further, right? You can come down, you can get hit, right? But a lot of the times, like you get, if you can look to potentially invest for the longer, it depends on how you approach this really, right? If you say, hey, I'm going to buy this, but I'm going to hold it for 10 years, like, okay, well, who cares where you buy? Don't be looking at the 15-minute chart if you're holding it for 10 years, dude. Okay? There's no point, because you can buy a little bit now, you can buy a little bit later, you can buy a little bit later on. And if even it comes down to $60, your average price could probably still be 65. You know, if it comes down to $20 and you're just buying a little bit, buying a little bit, buying a little bit, it is what it is. If we saw some crazy move and you're just averaging in. So think of your time frame, think of your horizon. If it's just a couple of days, if it's like a shorter term trade, I would prefer the tightening up and then playing a breakout and so forth. That's how I would prefer it in the shorter time frame. And if it's longer time frame, I do prefer us being in a more positive trend, but I know people that are like value investors that say, no, when I see crazy moves to the downside, I start to initiate positions for the long hold. And like even like dividend players, right? I don't know if Nike pays a dividend or not. I can't remember. Oh, they do pay a dividend. For like dividend players, they you know, they add it to their portfolio and they really just focus on the amount of shares that they buy and not like not really too much about the price and the chart and stuff like that, you know? Let's look at MU. Mu. Whoa. Double streams, double views. a second here. Hold on, I gotta see what this video is. That's funny, dude. I gotta show this photo. This is funny. My wife sent me a video of my dog. Okay, so Micron, yeah. So a bullish earnings gap. We didn't really consolidate. We pull back a little bit, and you get follow through, right? So yeah, strong stocks get typically stronger, and that's what we're seeing. So now we're consolidating that move, pulling into the 20. Like, is this the high forever? I don't know, probably not. Just based off of just trends. Is it extended and maybe needs some more time to consolidate? I would like that. It was very similar to here. Now, I love this consolidation, and I love where it stands within the 20 and 200 and the 50 days. But we had earnings, unfortunately, right? We have earnings right there, and earnings, you don't know if it's going to go up like this or if it's going to come down like that. So what you do is you typically wait, you see what happens, or what I do, and then I wait for what's called a bullish earnings gap. This one happened very quickly. Boom, pop to the upside. And now we're getting a little bit more consolidation here. So yeah, I think that there's a possibility that you pop up, you retest this swing high for a play, but where do you put your stop? Maybe if you're entering here, you'd have to have your stop pretty much at the low of this day, right? Or if you're going to give it more space, like down here, you got to really think your risk to reward out, right? That's not really a great risk to reward there. So you'd have to really hope that it's going to go a lot higher. So in other words, if you go like this and tighten up, then you'd have a little bit more clear risk, and you would actually see some strength coming in too. Because right now it's down on the day, but we are seeing some strength from the off the lows of the day. Is Lululemon bouncing right now? Is that what's going on right now? Yeah. It's probably because I have a position. Or do I? No, I don't know. I'll show you afterwards. Maybe if I have one or not. Yeah, so Lulu, I mean, it's still beaten up. I mean, we're getting a little bit of a bounce here in a horrible downtrend. It's going to get some sort of bounce here at some point, right? Is it now? I don't know. It's still below a declining 5-day moving average. It's working off some oversold conditions. Now, when I look at this, okay, the first question is, first, before saying, hey, where can I enter, where can it go? Okay, where did it come from? It just came from here and straight up, right? What have we not seen? Actually, so what have we not seen here? We have not seen a consolidation of this move yet. Sometimes it doesn't consolidate. Sometimes it just keeps going for a while. But what we have not seen is a consolidation. So I would prefer to see a consolidation, a pullback, and then giving us an idea that we have a higher low. And then you can see potentially strength follow through that, and it gives you a little bit better risk reward. Because if you're just looking at this now and you say, nah, I prefer looking at the daily time frame and I'm just going to take a stab at it, you would approach it differently. You'd say, okay, I'm entering it right now, and my stop would be at the low of the day. And then you would try to play what? Okay, maybe a 1-to-1, maybe a 1-to-2, back up into this area. I mean, that makes sense too, but you got to respect the stop. And yeah, these things are going to bounce. I mean, right? Stocks sell off and they bounce. Stocks rip up higher and they sell off, right? It's just the way the market moves, people. Timing it is a whole nother aspect. So I like when I see these large moves to the downside. I don't mind fading them as long as I'm a controlled position. Ah, man, Quantum missed by a little bit. Bummer. It's okay though.
Continental affirming their guidance, reporting preliminary.
No, I do use Philippe. I use the RSI. It's just not on my chart right now, right? So if I pull up the RSI, there's probably a positive divergence. I use the RSI. I like seeing it. I like applying it.
CON trading.
There's no positive divergence. It's pretty just oversold.
Q1 sales seen at 9.8 billion euro. That was below the 10.1 billion estimate.
I just didn't have it on my screen right then and there. No big D. No big D. Okay, let's take a look at the market, see what we're doing. So we had that sell-off. We're kind of recovering there. We have sellers up overhead. They've kind of been adding in.
They're guiding. They expect Q1 adjusted.
And we have Powell in about an hour.
2.0% is Continental.
S&P 500.
That would also be below estimates.
Getting a little loose and wild right here. This is up into this area. Market net flow, is it giving us anything today? Nah. the days where we can really push things and is when we get these like clear trends, and it's just not giving us that. So we have a big little bar here at 505. We're about 40 cents off. So 505 is right here. So for the SPY, you would really want to see SPY above 505 if you're bullish.
Expect adjusted.
I'm gonna put a bar there right now.
Expect to be adjusted free cash flow to be around negative 1.1.
But right now,
euro.
price can repel from 505. And that's kind of what it's been doing. Repel, repel, repel. Okay. That's just based off of this gamma level here from Trady Ticks, 505. Kind of a big bar there, okay? So the magnet's at 504. So price can attract to 504, which is right here. And then repel from 505. Now, if we can get above 505, it can repel. It can push itself out and away. And that's kind of this level that we've been watching. See how it's kind of came in a few times right there? Try to get above it. It acted as support, but when we broke below it, it kind of pushes, and pushes. So yeah, right now you want to be back above 505 on the SPY. Just not there yet.
We've seen Goodyear Tire take a small leg lower here on the pre-announcement from Continental over in Europe.
And a lot of market chop here on NQ. I appreciate that, Ruben. Palantir. Yeah, we'll pull up Palantir. A lot of these names I pull up on pretty frequently. I'm going to go through my tight list. This is something that I send out to the Discord group every week. I haven't posted any trade ideas. If you're in the Discord, I haven't posted any trade ideas since the last video, just because of the context of the market. Like I know that I can find some and put some out there, but it's just, I'm just not really too interested right now. So I'm just not going to, I'm not interested in many setups given the context of the market. So it is what it is. It's kind of annoying, but it's also respected later down the road if something big happens. Which I wouldn't consider this big, but something's happening. So Palantir, I think Palantir still looks decent. I know that people are saying this is a head and shoulders pattern, and I think that they're okay, right. I don't really care about the pattern, but what's the pattern telling us, dude? Okay, what's the pattern telling us? It's telling us that we're breaking down from not even a horizontal area of prior support. We broke down from this and it turned into a prior area of resistance, right? And really what this is showing is a high to a lower high to another lower high, and we're getting some follow through, okay? But you look to the left of the screen and what are we doing? We broke through this large base here, this large area off a powerful earnings move, okay? And it's literally just digesting it. So when I look at this, I can also look at this like, okay, we can watch this trend and we can just watch for these lower highs to change and these lower lows to change. So if we bounce up and we pull back in and we come back up and we put in a higher low and then all of a sudden we break to a higher high, this can look a lot better. It can look a lot better. Right now, it doesn't really give us the clear setup. And then we have earnings, like you said, mentioned May 6th, right? So May 6th is some days out. We'd have to go out to May 10 because May 3rd. So you're looking at a $3.76 move on earnings. I mean, we don't know where price is going to be at that time, but $3 in this name is, that's a pretty big move. So if before earnings we do bounce up and we come back in and we go like this, and then all of a sudden we move up $3 from this point, I mean, we're back up to the all-time highs. On vice versa, if we don't break it and we keep on trending down lower, if we come like this and we break down to another low and we're starting over here, or maybe we're down even lower here, or wherever the case is going into earnings, we can break $3 lower and we're back to fill the earnings gap right around there. But we got to look at what earnings the expected move is come that time. So really, I think this is just a consolidation more than anything. Hey, JW, thanks for the super chat. $9.99 with the super chat, man. You didn't need to do that. I appreciate that. Thank you. Thank you. Thank you. What study is that I'm using to show volume at a particular price? I'm confused. Which one are you talking about? Which one are you talking about? You're welcome, Lord. And thank you for realizing that it's just an opinion. Thank you for noticing that. Some people look into opinions and they think it's like cold hard facts, but it's an opinion. Thank you. And that's what these markets are made of. Yeah, so Brett King, the study that's using volume, I only have the moving averages up right now. Are you talking about like up volume profile? Oh, are you talking about maybe on the 15-minute time frame right over here? If you're talking about this, then yeah, that study is volume profile. But I'm not too sure if that's what you mean. I use the 15-minute chart with the 5-day moving average, and sometimes I'll apply the volume profile, but I specifically use it for 10 days. Because sometimes you can see like a point of control and you can get pops back to these point of controls. Trading view. Hey, Dean, I'm asking about some meme coins. I think I've traded 1 or 2 meme coins maybe in the history of meme coins for me that I can remember. Shiba Inu is one that I traded. I traded like back in 2021, like a little flag pattern that went up 100%, man. And it was more than lucky, and I traded like $100. Okay. I'm not the guy to talk to about meme coins at all. I do not understand them, but I can tell you that I watched the Sailor to Shift tool. The Sailor to Shift tool has caught great moves in Bitcoin and great sell side in Bitcoin. And the meme coins typically have a strong correlation with Bitcoin. So that tool can be used in conjunction. I don't know if that correlation is going to continue to hold. All right. I look at like names like Mara, and Mara's been pancaked. Look at this, right? It's contracted so tight here, and the volatility, even though that's a bearish, falling wedge, bullish falling wedge, right? It expands. I don't care if it's bullish, bearish. I care that volume's contracting, and it contracted to the downside. And like, I think that there's going to be opportunities here, but this sell-off, did you know that this sell-off, this big volatility here actually took place when we got the sell signal and the sell trigger in the Sailor to Shift tool? All right, so look at like Riot. What's Riot doing? Tightening up really good here. It expanded to the downside. We didn't break above the high on this inside trading day. So these were patterns that I was watching for potential break of these highs, and it didn't. It expanded to the downside. And if you don't respect that, then you get stuck in a trade down this much. Okay, but these happened on a sell signal, buy signal of the Sailor to Shift tool. So does anybody here not know what even that is, the Sailor to Shift tool? Should I bring it up again and kind of show you what it looks like again? And look at MicroStrategy. And I know people are going to be quick to buy these dips. MicroStrategy, last 3 days, right? We had a sell signal, sell trigger. The official one was on Sunday, but we got the sell signal prior to that. It was last week or something. Micro getting tight on the Q. SPY thoughts. What's your thoughts on AMD? So AMD, I did go over. I'll visit that again. So as far as the getting tight here on the Q SPY, the overhead stuff, the overhead supply is kind of what's bugging me. So I think we got to gobble this up, Pac-Man it out. And then I feel like that opens the door for something. So yeah, right now, yeah, you can see I can see what you're saying. It's getting a little tight here, but it's kind of going sideways there. If I look at the SPY, see that 505 level? Okay, so let's zoom in here. See 505, how price can repel from it. So it came right up into 505 and it's repelling from it again. Why? It's not just a level on my screen. This is a gamma level, right? 505, this big bar. Green bars mean that price can push away from, okay? Or red bars means price can magnetize to them. So we're above 504. 504 is down here. This is a magnet. Price can pull to it. This repels price, goes up to it, and it's repelling price back down. So if you're bullish, you want to be above 505. Okay? Intraday. Intraday is what we're looking at there. You see that? I mean, look at that. Look at the repel. You understand, you know, I know a lot of traders like using support and resistance and all that stuff, and that's great. But imagine if you have this to your tool belt. It's, you know, where would you draw your support and resistance if you didn't know this gamma level? You'd probably draw it up here more, which makes sense, right? Yeah, I wouldn't really know where to draw it. You'd, you know, look at closes, highs or lows, and, you know, look where volume may be traded. Okay. Let's look at market net flow, and market net flow is, once again, it's not giving us anything today, which means, you know, we're chopped up. We got about 40 minutes or so left till we see J Powell. So even that 504, you'd want to really get above this over here. Enjoy life every day with Charlotte. Felix, thank you for subscribing to the channel. Appreciate that. If you're new here and you're just watching the channel, make sure to subscribe. We do these lives quite frequently now. It's fairly new on YouTube and even Twitch. I've only been doing live streaming for about 3 months now, even less though on YouTube. Is that the 5 day up above? Yes. Are you talking about over here? Wait, no, this right here is the week to day anchored VWAP. The 5 day moving average is over here, the purple line. Okay. I really can't wait to see what price looks like so we can get a really good example. If price can break 505 substantially there, you can really start to push, and then maybe we'll see if anything really kind of spikes and changes from this perspective over here. But look at this big old bar here, right? This gamma exposure level on 0 date, right? Pretty big bar. Yeah, they're hardly ever exact prices. Even the gamma is not exact prices, right? But it's important to know where these gamma levels are. Zones. I know people do just lines. People do zones. Preference. But you're right. It's very rarely ever exact. Give me a second here. All right. Hey, MS Sterling, I appreciate that. I'm glad to hear that. Thanks for being a first-time chatter there on Twitch. Said that joined the Patreon last week and totally happy with the perks. Some cool stuff in there. I mean, like, I don't use all everything, right? There's like, I have the entire Trading Ticks suite there, right? So for example, people, you see these like, you see this stuff like right here, like this and like this. In the Discord, you can just type in this stuff in the query channel. So if you're in the Discord and you don't know that, the query channel is where you can type in like the commands, and you can get like these updated charts, you know, wherever you're at. But there's also like other commands you can type in to get all kinds of information on individual stocks and whatever. It's like tools in the tool belt, you know. It's very cool. That was recently added to the Discord, to the Patreon thing. Because I thought it'd be cool. Well, I don't know what to say. You know, is what it is. I also do the zones. The zones are kind of cool. Let's give you. I'll show you the zones right now. Let's see what they looked like last night. You guys want to see the zones? The zones is a indicator based off of this. It's a sheet that I put together called the zones document, really. Based off of an indicator built by Joe Catanzara. It's bridge bands. And really the bridge bands are kind of like Bollinger Bands, but they're more advanced. They respond a little bit quicker. And so now I extract bulk data to view the markets from a fractal perspective to really quickly see where they lie within the bands, to see like overextended areas or potentially underextended areas. And yesterday, the reason why I was like today I was talking about a stock market bounce potentially is because we're near the low end on the S&P 500 band. We're at the higher end for the VIX. Doesn't mean that these are dynamic. They're always changing. These bands, they go down and price can go down too, and they can stay in these levels, right? Same thing here. And they can, you know, contract and expand, but it's just a quick visualization. And I could go here and I'd be like, oh, SPY, Qs, and IWM, they're at the lower band, the lower level bands. You know, to the upper band, there's about a 7.1%, there's 7.11% from the high. You have your midpoints, and then you have these green and red lines in the middle, and that just tells you whether or not you're in a bullish trend or bearish trend in the product. And the bullish or bearish trend is based off of something very simple. It's the Dawn Chain channel, looking at, I think, 30 days, or I gotta look now. I think it's 90 days. I can't remember off the top of my head. And then you like go out down the list. These update every day. But yeah, and then I give the actual numbers. This is the visualization. So you can see a lot of them are getting broken down from, you know, the price action. Then you have SQQ obviously up there. And what I like to do is I go through here. You have the S&P 100, the entire S&P 100. So Microsoft, right, at the low end with the a bullish trend at the lower end. So these things like, okay, you don't short here. You potentially buy into bounces maybe to the middle of the range, maybe even to the higher range. All right, and then you could download the bridge band indicator or whatever, and you can visualize it on your chart because they are dynamic and changing. But I like to do this, and I just run some Python code and, you know, extract the data so I can visualize it very quickly. So this is the whole S&P 100, right? But then I have global ETFs, all these global ETFs here. You have commodities. I do currencies. So this is interesting. Like, so look at what happens when the dollar's up at the higher end of the range. What are you noticing? Currencies across everywhere, right? FXA, FXB, FXC, FXE, FXY, and so forth, right? Then you have BIDI, which is inverse BIDO. So when this is at the lower, this is obviously at the higher. 10-year yield, more towards the north of the high band, TYX. And then what happens here, you have like HYG towards the lower end, IEF, TLT. That's fixed income. PFIX moves with the 10-year yield. That's more towards the higher band. And then the dot changes colors too, based off of where it stands. So I don't know. I think it's kind of cool. I don't live stream every day, Katesh, but I do. Sorry if I pronounced that wrong, but I do been doing it frequently. Look at all the volatility. So here's volatility, and I have like VIX 3-month, yeah, like Amazon volatility, Apple volatility, Google volatility, Goldman Sachs volatility, gold volatility, the VIX, VXN, which is NASDAQ vol, RVX, Russell vol, 9-day VIX. I don't know if people use that or not. Volatility of volatility, future volatility, skew, or not skew, the move index of bond volatility. Look at all the volatilities at the higher end. And when it's all at the higher end, you get products towards the lower end, typically. And then I have some China names here too, because I was interested in China. Some of these names are pulling back, still in bearish trends. I don't know. Pretty cool. I don't know. I think it's cool. Okay. So we're still getting hung up at 505. Remember, 504 is technically the magnet. So we're trying to see if we can break through that. It's just choppy here. Flat on the day, big nothing burger. When did I go live, Craig? I went to live today, probably at around like an hour ago, hour and a half maybe. I'll pull up thoughts on NVIDIA. I'll pull up NVIDIA. I don't really have much thoughts on like calls or puts or anything like that, so I'll check that out.
Inflation will peak around 75% in the coming months. That's the Turkish central bank governor.
Oh, you're welcome, Tulip. I think, yeah, most of the market's just kind of waiting around. So I'll pull up the sailor to shift tool for those that don't know, unless if everyone knows. If you want me to bring up the sailor to shift tool, just type in 1 in the comments. And I'll see if I get like quite a few of them, and then I'll bring it up. If not, then I would just suspect most of you already know what it is and where it's at. Don't know why people are obsessed with the Chinese markets and their geopolitical outlook. Just probably because it's a large economy, one of the largest economies in the world, by my guess. At least that would be like a valid assumption. Other than that, I don't really know. I really don't know. Okay, we're getting quite a bit of ones, so hey, what's up, Kirby? What's up, Renee? What's up, Dan? What's up, Nick? What's up, Blue Bro? What's up, Simon? What's up, John? I'll pull up the sailor shift tool. It looks like enough people want it out, so I'll pull it up. Give me a second. The people have spoken. Makensky says too. That's all funny. That's funny. Okay, give me a second. Alright, so we're still floating around, still haven't tagged one of these gamma levels. Might happen still today. Same 0-day range that we have for the day. So that's the range for the day. We can draw that in probably now.
CFO saying aspirational customers in the U.S. are being pressured by inflation. MC in Paris, France.
So today I can probably draw this in now. Feel pretty confident, but we'll see. Kind of been here since early in the morning, but we had this like lower area down here as potential. And then we have this upper area down up here as potential resistance. So that would be the zone for the day. That's been established really since the early trading session, before the market even opened up. Just based off 0-day levels. So we'll keep an eye. I'm still loading up the Sailor to Shift 2 tool. Sailor to Ship. Shift. Peter Shift tool. It does sound like ship. That's funny. Okay. I know some don't care about hearing this right now, but some do. Sailor to Shift tool I'll go through quickly. I'm going to hide myself just so you can see with the very last buy signal that I have out there. Okay. So this is the Sailor to Shift tool. The Sailor to Shift tool is measuring two different assets, the rate of change between two different assets. It's measuring the rate of change between Bitcoin and gold. So more specifically, the 4-week rate of change. And from what I've noticed is that when you get a negative rate of change between Bitcoin and gold, meaning, if it goes negative, gold's typically outperforming at a stronger rate than Bitcoin is. When you go below, it's marked these selling signals, okay? But not like perfectly. There's been a lot of whipsaws. So I went back through the history of Bitcoin as much as I could, back to all their big crashes, back to all their big rips. And I discovered that, hey, there's an easy strategy that you can apply to this. And what you're seeing on the screen is a lot of red lines and green lines. And the red lines and green lines are showing us when we have a positive rate of change flip from negative. But then more specifically, you get the price action to cross above the high of the prior week. So that is officially a buy signal, buy trigger. And then on the flip side, if you get a negative rate of change flip, it's a sell signal, but then you wait for what's called a trigger. And the trigger comes when you cross below the prior trading week. So for example, if you go back way out here in 2020, early in October here, we had a buy signal, buy trigger, and that marked all the way up here until we got our first sell signal, and then official sell trigger on this week right here. And then it sold off. We got a buy signal, it ripped up higher, sell, buy, sell, whipsaw, sell, buy, sell, sell. It was constantly selling there. Oh, maybe I forgot to do I gotta maybe update this. This one, did this actually ever come? So if I go back, I think that this might have been a buy. So technically there was a buy signal here into here, and then it sold right here. I gotta update that, but that's fine. And then you get a lot of whipsaws over here. But then the last one, I want to just zoom over here to where we are and what this means is one of the last buy signals back here at 25,000 in September, even going into October. And what I find so interesting about this, people too, is guess what, dude? This actually occurred before the market also rallied. So I'm looking at this, I'm like, wow, actually Bitcoin is a high beta asset that typically is a strong correlation to the stock market, like the Qs, the NASDAQ. Then gold has always been known as like this safe haven, lower beta. So I'm measuring high beta to low beta and looking for these signals for potential turning points. And I'm using it for crypto here, but man, it's worked actually for markets. It's worked for individual equities. It's pretty impressive. But the September came, and that marked the buy signal, buy trigger took place right here the following week when we crossed above the high. And it moved all the way up from 25,000 into about 40,000 when we got our sell signal and sell trigger. And then that ended up being a whipsaw, and it whipsawed right back to a buy signal. And then we had a sell signal here, but no trigger, meaning that the trigger, right? The trigger would have to, this price when it was here, had to cross below the prior week, which it did not do because we had this candle way down here. It was a big hammer candle. And then we went up. So basically, it caught this move and it caught this move. And now just last week right here, we got a sell signal, but we didn't get a trigger until the following week. This week right here crossed under the prior week low. Okay, so now we're officially on a sell signal, sell trigger, And now what I'm doing is I just say, okay, well, this has caught all the big dumps. Sometimes it's just whipsaws. But now I just want to see this turn back up and give us a buy signal and buy trigger. That's it.
This year and next.
So it identified it pretty clearly, pretty clean. Now this started turning around a lot sooner, and other people make a 3-week rate of change, right? And then, but they get more whipsaws, okay? But then they get the turns earlier too. And some people don't wait for the week to close or get below the prior week. That's just that's just a strategy that I put together, but you can use your own. So I thought that was cool. I shared this. The video got like no views. I think it's probably the best buy and sell indicator out there. I think it's better than a lot of products. And I think it hits nails on the head. I think it's the best indicator for buying and selling Bitcoin right now.
By the data.
And that's how it currently stands. I don't know if it's going to always be that way, but show me another indicator that's actually been this accurate. And then I'll be like, oh, okay, yeah, no, that's more accurate. But I think that it's crazy, the accuracy to it so far. Crazy to me. Not perfect, but it's been pretty amazing. It's pretty cool. But remember, things don't last forever. So things change. Things change. So you got to always proceed with caution. All right, so 505 we're still pushing away from, and we're coming into that 404 area. So let me see if anything's updated here. 506 is starting to grow a little bit here, so we get a magnet up a little bit higher. So if we can break 505, look for a tag of 506, but we're still kind of just choodling around there. And we have about 30 minutes or so before. Dean's asking where you can find the cellular shift tool. I have a video on my YouTube. Just type in figuring out money, cellular shift tool. Cellular to shift. I don't know. Make sure it's mine that you're watching, because other people try to copy it and make it and use their own. I was the original creator of it, and then obviously you have a bunch of people try to make new indicators from it and create new strategies about it. At least watch where it came from, and then break out into it. But I tell you how you can build it for free yourself. And then I always post about it, and I talk about it live here too as well. And then I have a permalink on my in the stock market indicator section in my Discord. I have a permalink to it, so you can view it whenever. But you can view it yourself. You can build it yourself and view it yourself. Dang those copycats! It's not a big deal. Like most of them gave credit because it'd be way too obvious if I just made this and people started saying, "Look at what I created." It'd be way too obvious. But they make their own strategies around it, and some might be really good. I haven't done my research there, so I think it's worth seeing their strategies and how they utilize it. Because it could be better than the way I use it. I really don't know. Okay, so if Papa Powell to crash the market. If Papa Powell is going to come in here and crash the markets, I'd be paying close attention to the weekly expected move, lower daily expected move. But remember, the market's been kind of, it's kind of bottoming itself here. At least that's what it feels like. Holding itself together after a strong move down. We have that positive divergence. I think we get over 505, man. I think we go target 506. I think that's in the cards. We just got to get over that 505. What makes me think we can do that is, oh man, come on. This keeps changing. It keeps changing. I wish I could see. I wish we had a clear. If we had some good market net flow here, we would have some sort of an edge. You see this? You see how ugly this looks? Okay, here's the zero line. You have the red line above the green line, but it's way below zero. And price action, yeah, it's been heading down, and the price action is going up. This is like straight chop day, straight chop. So you gotta wait for things to change. But notice how you could have called it a chop day here. Like you definitely could have called it a range day here. Definitely would have called it here. And if you're here, you definitely know that it's all chop. Okay. That's what's so powerful about this tool is you can identify range day, trend day early in the trading session. And then it adjusts, it changes, and then you have to adjust too and change too as well.
The neutral rate may not be the target of the current phase.
Thoughts on WFC, Wells Fargo? I mean, it doesn't look horrible. It's just a little bit too like shaky and bakey right here. You know what I'm saying? Like shaky, 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 and it was looking real good right here.
LVMH management after their preliminary results.
I gotta look at LVMH. Give me a second here.
This year for watches.
No, what's Louis Vuitton? What's the ticker for Louis Vuitton? LVMH.
Sephora in China.
There it is. LVMHF. Okay. No, this is not. What's Louis Vuitton's? Is this Louis Vuitton? LVMH. Oh, there, wait, no. What is it? What is the ticker? I can't even spell it. Whatever. If anybody has it, let me know. I thought it was LVMUY. Thank you. Just keep on hearing news about it. Yeah. Man. Okay. Nothing crazy. All right, where was I before I got distracted? All right, we're pulling up to that 505 level. Okay, so here we go. Let's see if we can get through this. I'm gonna remove the RSI. Okay, so we're targeting that gamma line again, right? It pushes up to it and typically repels it, but we're coming again for it. We had an interesting bar over here at 506. It went away, but it's still kind of there. Let's see if we can get through.
Steve Villeroy commenting the looming pace of disinflation is likely slower.
Thank you guys for the answer there. Everyone seemed to know it. I always get my letters mixed up. So, sorry, Wells Fargo. You were mentioning Wells Fargo. Yeah, so I think the chart looks good. I mean, in all fairness, right? It's holding up rather well on earnings. It looks like this level could kind of be the one to watch. So I'd prefer to see it tighten back up here and offer a little bit better risk reward. I don't like this shakiness right here, but it's in a positive trend. It's holding up here. But I'm just not really ready to execute on anything. I prefer actually to buy it higher and like give me something like a little bit tighter and then pop through it. And then I want to buy the breakout. You know, a great example of like that. And by the way, what was I going to say? Let me go back. I'll give you a great example of that. Okay. That's what I was going to say. But by the way, we're also still in negative gamma territory and below 5-day moving average. So you have to consider that. So for example, like see how this kind of like higher lows and then we tightened up here and then boom, we saw this massive breakout. So this is what I like about it, coming back up and tightening up and then potentially seeing a pop through a clear area of resistance. So this is one that I traded and then it's fading back in, lower volume. Wait to see how this tightens up and resets itself back up. I have a little bit of a position left, but I bulked out right here. So I bought here and I unloaded 70% of the position right here.
Illinois sees no reason disinflation won't happen in the.
It was such a strong move. Like you can't. I'm still like if I go like this, how much am I? I'm still up 8%, but this thing went up. I think I got out just under 5, like 24%, 23%. Pretty cool. That one took me a while to get to, like to get ready for that trade. So yeah, here, right? I'd like to see it tighten back up. That's what I think. Yep, Powell starts in about 20 minutos. Juan, yeah, so I actually did the calculations, but it was a while ago. If the strategy just outperforms the price of Bitcoin by itself, it absolutely did on the Sailor to Shift tool. Now, if that's going to hold up forever, I don't know, but it's definitely outperformed the price of Bitcoin by buying and holding. But here's the thing, Juan. The problem is with backtesting, you're backtesting what already happened, you know? So it's like, yeah, it's worked in the past, but you don't know what the future holds. So like when people like try to sell like algorithms and stuff and strategies, they're literally trying to create a strategy that worked for something that previously happened. And they can work the numbers, work the algorithm, and they can eventually find something like, see, it outperformed the S&P 500 by this much. Okay. And it's like, okay, but will it now? Will it do that now?
More from
And we
Bill
don't
Roy
know.
saying that focusing too
Because
much
once
on the
again,
last
conditions
mile of
change.
disinflation runs the risk of undershooting the target.
Let's take a look at Costco and Celsius. We'll call Costco first, and we'll pull up Celsius.
Williams, the Fed's Williams saying inflation across categories has
Give me a
fallen
second.
over the last 1.5 years.
Got Fed speak. Fed Williams. I don't know. So we're still getting hung up at that 505 there. Let me go back over to Celsius or Costco. I think Costco, I think we got to be careful with Costco. Costco also came far and fast. And on earnings, we got a big bearish earnings gap. It opened lower and closed at the low. So typically you get followed through to the downside. So this, we were talking earlier about like somebody pulled up, said, hey, what about this chart on earnings? Like, or JNJ, right? And we talked about, well, it's a bearish earnings gap. So typically what happens, you can go up, right? You go down, and you drift up with on lighter volume, and then all of a sudden it gets tight, and then we break down with stronger volume. Boom. And now what? We're kind of floating up here on lighter volume. This day we broke down an outside day with bigger volume. So this to me seems more like distribution and follow through from the earnings move.
More from the Turkish central bank governor saying now our hiking cycle is over. We don't want to.
So that would be Costco for me. So it's a little too hectic here. Like I don't see the setup yet. It seems like it can go press these lows, and we're seeing a low, lower low. Sorry, a high, a lower high, a lower high, a low, a lower low. So you know, if I look at this and you say, okay, well, what can we potentially look for?
The Turkish central
I mean,
banker,
I would prefer buying it way more up here if we're really going to start seeing strength and, you know, crossing back up. And then I try to play it into this gap filler, this prior high versus, you know, entering here and potentially getting pulled all the way down. And you got to just think in terms of risk management. Like, so if you think that this is going to be taken out this high and you want to buy right here, I mean, where's your risk go? Because you never know. Earnings could come out and we could be right back up here. Like, I don't know. Strong stocks typically get stronger. It's just I'm looking at this big earnings break right here, and I'm seeing the lower highs, and I'm seeing the days that are down. You're seeing increased volume from the prior trading day. It means that we can consolidate for a while. Go back through history, right? Go back through history. What happened like when we get these big moves? Oop, boom, 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 and consolidate like crazy. Look at this move right here. See how tight price action got? Big dip, smaller dip, smaller dip, smaller dip, getting above these averages right here, and then bam.
Jerome Powell in the next hour.
That's what I mean about volatility, just like compressing. Contraction, expansion leads to contraction.
The economy and policy at the top.
This looked like a diamond top at a point, but it broke. A diamond top, whatever, dude. It's a diamond top, diamond bottom. It's really just look at the right side. The right side's tightening up. Who cares about these names? The names don't matter. The names do not matter. Flags, pennants, wedges, VCPs, diamond tops, bottom diamonds, whatever, head and shoulders, inverse head and shoulders, all those patterns to some extent just go through periods of contraction and expansion. That's all that is being highlighted. So all you need to really be good at is watching for periods of contraction. I don't like, and that's the thing, like, okay, Mara, bullish falling wedge, right? Bullish falling wedge. Okay, but it broke down. But what do we know? It was contracting. When it contracts, it expands, so respect it on the expansion to the downside. Okay? Like I said, expansion, right? Boom. I still think that there's going to be opportunities in these names that got beaten down. Where that might be, I don't really know. Like, see, it's coming down into these levels right here. And we saw some volume there. We saw some volume here. Nothing really crazy there. I think the volume really took off over there. But yeah, okay. Mara's breaking down because of Bitcoin halving. I think they're still selling tomorrow. Yeah, maybe, yep. I mean, I don't see why not. I mean, this thing came and ran, and timing this one would be a difficult one. Hey, what's up, Dart? Thanks for the super chat. Has Powell spoken yet? Powell has not spoken yet. Powell will be coming out in now, I believe, 15 minutes? 15 minutes, Fed Powell. I have the link here. I'm going to refresh it, and we'll pull it up and we'll kind of hear what he has to say.
But we want to see more details.
Do I have to RSVP for this event? Event sponsor is Canada Institute. Give me a second. Maybe do I have to RSVP for this thing? Oh, I guess I'll, let me see here. I don't know. I'll keep refreshing it when it comes to that time, but. Head, shoulders, knees, and toes. That's funny. Any thoughts on mRNA? We'll pull up mRNA. mRNA, what is this? Oh, Moderna. I mean, actually...
Feds Williams saying he sees potential U.S. growth around 2%.
I mean, actually, it doesn't look too bad, surprisingly, the chart itself. So notice how, like, the 200, it's been declining, okay? But now it's like, now we're trying to hold this, so the longer we stay above it, it's starting to kind of flatten out to turn up. We have earnings around the corner, so that's something that you want to be cautious of, okay? But then you have the 20-day turning up-ish. It's kind of neutral, right? And price is right below it. And then the 50-day turning up, we just had that little crossover, the golden cross, right? But if you look at this and you're like, okay, here's a low, here's a low, here's a low. These are higher lows. And then you go to the left of the screen and you just draw through and you say, okay, well, it's getting hung up here at around this 110, 115 area, but we have higher lows building into this. So when I think about this and I think of just supply and demand or bulls, bears, the bears are kind of saying, hey, I got this camp right here. And every time you come up here, I'm going to defend my camp, right? Here's my camp. Here's my war zone. The bulls came in, they said, and the bears said, get the hell out of here. They came up again. They said, nah, sorry, dude. And the bulls like, all right, let's retreat. Let's reconsider our game plan here. Okay, maybe we'll reconsider our battle, but we'll approach it in December. Then they were like, charge. And then they went up and the bears said, yeah, dude, what do you think we've been doing, dude? We've been preparing for this forever. Fight down, boom. And the bulls like said, okay, maybe if we set up a camp here, maybe if we set up a camp here, a little bit closer, when we charge next time, maybe it's going to be a little bit better, right? Maybe we can just keep moving closer and keep applying the pressure. So they charged and they got rejected, and now they're like right here, and they're saying, okay, now we're in the midst of who's really going to win this battle here. I forgot my monitor is off and my video is off. Here I am. Here for the background dance music. Let's go. We just wait until the rocket ships come out. So yeah, so as far as mRNA goes, I don't like establishing new trades into earnings. I think people know that. We're looking at like an $11-ish expected move or so, which means that we can see a pretty nice pop on earnings or a drop. But I do like how we're kind of just like building into that pivot right here. So let me go to the weekly time frame.
Alpha November Alpha trading in Spain.
The weekly time frame, we're getting a little tight here. An inside trading week came way off the highs from the prior week. But you see the bodies of these candles, how tiny they are? Probably not because my screen's so small. Small body, small body, small body, kind of small body, kind of small body, still a small body, but the week's not accumulated. This, right, to me, just screams indecision, right? It's like, okay, we're going for it. Oh, no, we're coming back in. Okay, we're going for it. Oh, no. Okay, oh, no, bulls are back. Oh, we're going for it. No, we're coming back. So I think what we're about to see here is probably some big moves here in Moderna, whether that's to the upside or downside. I couldn't tell you, but this tightness is allowing for a better risk to reward setup, right? Meaning that if we break out to the upside, you have a tight stop, and it could rip, right? Earnings is annoying, but what I would say is on earnings, if we get this huge gap up, right? Because I don't establish positions into earnings, but if we get a candle like this on earnings, it just goes like this, boom. Or whatever, okay? Then I would say, okay, so that breakout on powerful earnings gap, what I would then do is it typically gets continuation. So I would personally, I wouldn't just buy in at the high. I would say, okay, I want to see if it consolidates
what the Fed does, but we
and
don't
tightens
follow
up
it.
and maybe gives sights of potentially buying to play to the swing high, boom, or potentially higher. And that is something that I've done, once again, I do it over and over again. Target, boom, power earnings gap. I played right here to right here. Okay, there's Target, right? Disney, right? I'm just using these as examples because they're most recent. Wow, powerful earnings gap, pulled down. I played right here, boom, right into there. And I even said that I'd wait for it to tighten back up again, but I forgot about it to play it up. So that was a missed move there on me. Okay, let's take a look at the SPY. The SPY is not getting through that 505 level, right? It keeps on repelling away from 505. Keeps on pressing away from 505 to try to get it.
Austria, TKA, before Chicago revenue, 1.27
We got Powell coming out here in 10
billion
minutes.
Tango Kilo Alpha in Austria.
No audio?
Always alienating the fragmented
Can
world
nobody-
economy remains
can everybody hear me?
vulnerable to shocks.
Dude, is my mic muted? Nah. Yeah, you guys can hear me. Yeah. Okay. Okay. All right. Yeah, can we look at Chewy? Yeah, let's take a look at Chewy. Chewy was one that I've been interested in a while. I think it was like above 16. I liked it. I can't quite remember where I looked at it. I think it was it around 16? I can't really remember. But this one's also been one that's been hammered. It's in poor context. I think my dog told me about this one. But yeah, it's in a bad trend. But I mean, it's been trying to base out here. It's just look at the declining 200-day. It's going to take a while to fix that, obviously. But I did like to see how we had this positive divergence in the MACD, positive divergence in the RSI, and we're kind of holding around in and out that 16, where we've seen moves from that level before, right? And I think that's why I was interested. I'd have to pull up my old charts of when I posted this, but I definitely posted this one or talked about it or something like that. I can't remember. So I'd fully expect this consolidation and maybe even a pops higher. But I also, even if it comes up to here, I would still expect it to get hit back down and consolidate more and set back up. I like PayPal. PayPal was looking good. PayPal was setting up. Like if I look at the weekly time frame, I mean, it's setting up, right? Like the 200-day or the 40-week, the 30-week, the 10-week, it's pulling back into the 10-week right now. It's still early, right? So I'd like to see it tighten up and go a little bit more, and then this to turn around, this to turn up, like, and do something like that, and then maybe it could break up higher. So it's a little early, but I like how it's kind of forming. It was kind of very similar to like MSOS, right? These you can see the turn taking place here in these averages. Good look.
Rising inflation will likely be more volatile in the future around the 2% target.
It's a bullish divergence on their side, yeah. You and Asan, yeah, let's pull these ones up. You for like for potential bounces, are you saying, Trader Joe? Oh yeah, I see what you're saying. Yeah, like the beaten down names.
Fed's Barkin saying CPI data has not been supportive of a soft
Yep.
landing.
For long terms. Okay, cool. Yeah, and like that's what I mean. So your approach to that, like, right, you get way beaten down coming into earnings for a long-term potential hold, and then look at this, like these. Dude, did we post this actually? I'd have to go back, but I feel like this is something that I would have posted. Back here, where you get this earnings move that like we open here and close at the high, and these can mark monster reversals. And what this reminded me of, I don't know if it was you or not, but this reminded me of like the end of 2022 or whatever, when we had the reversal, big, bearish move, bearish start, positive earnings, and then it like consolidates and boom, we rip up higher. And now we're getting this pretty big, strong move to the downside here. You're going to get bounces with earnings around the corner. So yeah, these are names that I like, these beaten down names to an extent when the market's kind of uncertain. go to the weekly time frame. Yeah, and they've been, look at, I mean, just going sideways, but then you see when these pops happen, you also see some big volume come in. So remember, markets move between 4 different stages. You have accumulation, markup, distribution, decline. This is clearly decline. Is this accumulation? Well, we'll know soon, right? We got to get back above these 200 weekly, and then it takes time. So if you take speculative entries, just know, like, yeah, it could very well be, right? This is sideways. It could break down. Who knows? I don't know. But right now, right? It could be potentially sideways base. The longer the base, the higher in the space. So there's Asan, ASAN. I remember this one back in the day. This one was crazy. Also, another one that's kind of just cracking lower here. I think this was an earnings expected move, and it cracked lower is what I drew out here, I think. Yeah, look at these names, man. They're just getting clobbered. Earnings not too far away. Are you talking like from a fundamental perspective, some of these names look pretty decent? If that's the case, yeah, we can see. And you know what's funny is I wonder like to see like how the debt looks like with these. So with higher rates, you get these like names, right? So if I go back to the weekly time frame, hey, what was this time? When rates were slammed down probably, right? Slammed down in 2021 and these things take off and now they're getting hit even harder, right? While rates are high. So if the Fed comes in and hits rates, these are the names that you really want to focus in on. And I've shown this many times, like on like, if you look at like XRT, my XRT chart where I show like the, I'd have to show my XRT chart, not this one. And then IWM too, the same thing. When the Fed cuts rates and when they raise rates and like the difference between the market actions, pretty cool to see. All right, so we're starting here. The Fed in 5 minutes. It says standby, starting soon. Where are we? We're just doodling around 505 still. Let me see if anything's changed. Big old magnet at 503. Big old magnet at 503. That's lower. That's
are different between
fun. And then the range here for 0 date remains the same. A little bit more focused in on 510, 515, but the upper range here still starting the same, 510. Which is up here and down here. Okay. If we get some more sell side, just be watching for the weekly expected move, daily expected move for SPY. I don't know. Market net flow is not giving us anything. Sometimes market net flow leads us to believe what can happen when the Fed comes out, but this is telling us literally nothing today. Nothing. And the market's flat for the day. I'd like to see a bounce. I'd like to see it move up higher. We're live day trading, but we haven't put a freaking trade on. Rightfully so, though. Same thing with yesterday. I think I took a little snap at yesterday, and then stopped out. I took out like 50% of the position, and then I got stopped out for the remaining 50 at like break even. Because it's too stubborn to short. It's not my style. It's not that I'm stubborn on shorting. It's just, I just don't like it. The only time I like to short is not intraday, is like longer term swinger trades, but they're smaller size and, longer term charts, not longer term holds. All right, we got 2 minutes. This little live stream should be starting here. It looks like we're getting access now.
Through the miracle of the internet. Today's the opening event.
Today is the day.
Forum on the Canadian economy, as Avi said. And the objective of the forum is to educate U.S. policymakers and business leaders and the public on the dynamics of the Canadian economy and on the importance of our two countries' close economic relationship. Countries, like people, accomplish the most when they set clear priorities based on data. And any dispassionate review of the data shows that one of the very highest economic priorities for the United States has to be a relationship with Canada. Now, a lot of the discussion about the U.S.-Canada relationship tends to focus on its importance for Canada. Trudeau the Elder's famous comment about sleeping with an elephant. But Canada is our largest export market, almost 20%.
Sleeping with an elephant. What are we talking about?
Everything that we in the United States send abroad into this world of 8 billion people goes to the 40 million people in Canada, who are only 1/2 of 1% of the world. It is the largest and most goes to the 40 million people in
Bailey
Canada.
sees strong evidence
We're
that
only
the
1/2
process
of
of disinflation
1% of
is
the world.
working its way
It
through.
is the largest and most comprehensive two-way economic relationship among any two countries
All
in the
right,
world.
let's set this up a little bit.
The evolution of the energy economy of global importance will be heavily influenced, perhaps determined, by decisions that our two energy-producing nations make. We have a unique role in being advanced financial economies,
Give me a second, I'll
using
get
a
the
lot of
audio.
energy, but also significant energy producers, and can balance the effects on economy and society of the choices that we make. And on top of that, Canada is a key U.S. ally
How's the audio
in the
for the
international
speaking?
financial architecture. I've spent 3 different tours of duty in government service, where a big chunk of my job
More
was
from
international
Bailey saying you
financial
see strong
diplomacy.
evidence that the process
And we
of
could always count on the
disinflation is
Canadians
working
being
its
sane,
way through.
solid, and punching way above their weight. And yet the U.S. tends to take it for granted. And my experience in life is that the good things we take for granted, we tend to mess up. So my hope is that with this series of events, we can be part of helping focus folks in the United States on the importance to the U.S. of this relationship by finding speakers and topics that will have a very broad appeal beyond the usual suspects who focus on our relationship with Canada. And we certainly have that with our event today, which includes 3 of the most significant economic leaders of our two countries. Bill Murnau, our moderator today, is, well, when you look in Wikipedia under Renaissance Man, there is an inset photo of Bill Murnau and nobody else.
All right. Can you guys hear that? 1, good. And then 2, I'm going to leave Bookmap up. I'm going to hide myself for a second. I'm going to take a quick break,
the only
refresh
first
up on some
repo
water,
operation,
and
60
we can listen
counterparties
to see
taking
what's going on and how the market responds to all of this, okay?
$6 billion.
Let me know. Type 1 in the chat if you guys can hear good.
COVID-19, and a key reason for Canada's aforementioned above-weight punching into international diplomacy. As a business leader, he grew the
RFP is up from
multinational
3 to
human
27
resources
billion
firm Morneau
yesterday.
Chapnell from a family business to over 4,000 employees and the largest human resources provider in Canada. As a philanthropist, he's worked
Park
to
and
support
saying
the
the economy's
arts, help
not
at-risk
overheating,
youth,
but if so,
improve
we
access
can
to
deal
health
with it.
care and education
Smart for the Fed
all
to
around the
take its
world,
time
including
to
founding a school for
make a
Somali and
decision
Sudanese
on rate
girls in the
cuts.
UN
So
refugee
Park
camp in Kenya. And as a policy thinker, in addition to his role chairing this Washington Forum, he's chaired the C.D. Howe Institute, a leading Canadian think tank, and has written Where to From Here, a policy book that I assure it is several cuts above the typical former official's post-service book. I put it up there with Robert Rubin's In an Uncertain World. Anyone
right
who has
back.
ever served in any government of any country at any level at any time will immediately recognize the honesty and intelligence and savvy that he's brought to thinking about the lessons of his time in office for the issues facing Canada. And all of us, I highly urge all of you to read it. Tiff Macklem is the governor of the Bank of Canada, and another of the reasons for Canada's substantial above-weight punching in the world. In addition to his role as governor, he's the chair of the group of governors and heads of bank supervision. That's the oversight body of the Basel Committee, rather high profile these days. And he is co-chair of the Financial Stability Board's regional consultative group for the Americas. He's a distinguished economist, having headed the most important division of the bank's economic staff in the early 2000s, having played a critical role in Canada's response to the great financial crisis in his post in the Canadian Finance Ministry in the mid-2000s. He's been a senior deputy governor of the bank from 2010 until his appointment as governor. He's also been a distinguished academic, having served as dean of the Rotman School of Management at the University of Toronto. And our final panelist is Jerome Powell, chair of the Board of Governors of the Federal Reserve System. It is a weird task to introduce Chair Powell. It's like introducing Henry Kissinger. How do you do it without looking absurd? His doctoral thesis on Metternich received very high marks. So just let me say this. There is an anteroom off the main boardroom in the Eccles building, which is the Fed's true headquarters building. They're currently slumming it in an annex, where the portraits of all the Fed's chairmen hang. And as you look around them, it is borne in on you that none of them will have been as consequential across as broad a range of matters as Jerome Hayden Powell in managing the remarkably low inflation and high employment of the pre-COVID period, in the world historical response to both nationally and globally to the COVID event, in the first major review and explanation of a formal monetary policy framework for the Fed, and in managing the quite effective response to the most significant inflation in almost half a century, but one in which many of the traditional guideposts could not be helpful, requiring very creative thinking and deft management of the extremely well-meaning but hydra-headed body that is the Federal Open Market Committee. So with that, let me thank you again for coming, and let's turn to our panel.
Well, I want to start by thanking you, Randy, for that very, very generous set of introductions, and also for your willingness to step forward as the co-chair of the Washington Forum on the Canadian Economy. So we very much appreciate your esteemed leadership, and one of the key reasons we're here today is due to that. So really appreciate it. I'll just say personally, one of the things I liked most is you said Canadians were sane. So that's a pretty good starting point, I think, for our discussion here today. So with two esteemed panelists, I won't really be speaking much. I want to give both of you gentlemen an opportunity to talk a little bit about your respective economies, and I guess also recognize that we're here to talk about the Canada-US relationship and what is both distinct and different about our economies, but also what we share. So maybe with that, I could start with you, Governor Macklem, and then we'll talk to Chair Powell.
Well, thanks, Bill, and I think you better call me Tiff. It is a pleasure to be here, and thank you and Randy for launching this, for inviting us both. I am very pleased to be here to say a few words about the Canadian experience, and I always enjoy comparing notes with Chairman Powell. Now, as Canadians, we invariably compare ourselves to Americans, and maybe it's human nature, but we tend to focus on the differences. We've got different systems of government. We're bilingual in Canada. We have 3-down football, and we even have very colorful polymer banknotes. And certainly our climates, I think, are certainly the IMF meetings are always a welcome first blast of spring for the Canadians. Our economies obviously have much in common, but again, we often focus on the differences. If you look at growth in Canada and the United States over the 20 years leading up to COVID, remarkably, the average was exactly the same, average 2.2% in both countries. The sources of growth, though, have been a bit different. In Canada, we've grown more by adding workers. Our participation rate has risen more, and we've had proportionally higher rates of immigration. In the United States, adding workers has also been important, but increasing output per worker, or productivity, has made a relatively larger contribution. And I will admit, in Canada, we look at U.S. productivity growth with some envy, and we do ask ourselves, I mean, what can we learn from the U.S. experience? We are concerned about productivity growth in our country. Turning to the financial system, we both have strong banking systems, but the structure of our banking systems is quite different. In the United States, you've got a lot more banks than we do in Canada. In Canada, we have 5 large national banks and a number of important regional players. The structure of our mortgage market is also somewhat different. In Canada, the typical mortgage is 5 years. In the U.S., typical mortgage has a term of 30 years. And our banks in Canada tend to hold mortgages on their balance sheets. U.S. banks securitize a lot of their mortgages. Despite these differences, our systems are very integrated, and indeed, a number of large Canadian banks have large operations here in the United States. Our pandemic responses were also mixes of similarities and differences. You know, broadly speaking, the paths of our two economies were pretty similar.
I'm more interested in Powell.
We both cut interest rates.
We're still floating around that 505 level.
To effectively zero to support the economy through the pandemic. Then we both raised them very forcefully as inflation rose rapidly.
505 is now starting to become a magnet. This is actually a good sign.
Back.
And 500.
Growth has been more resilient in the United States.
This is a good look right now for a break higher.
And I think that's
still a little
partly
uncertain
related
given
to the stronger
context of market
productivity growth
flow.
I mentioned in the United States.
But this is actually
and
a
it may also
positive look.
be related to the fact that monetary policy may be having a bigger
term.
impact on households in Canada
So
because of the
let's break
different
above this
structure of
stuff.
our mortgage market.
Gobble, gobble.
More of our mortgages have reset in Canada, so more people are feeling those higher interest rates. And that has restrained household spending more in Canada. You know, in each of our countries, I do want to underline that we gear our policy decisions to our domestic monetary policy mandates. And in Canada, we have our own currency, we have a flexible exchange rate, so we can run our own monetary policy. So simply put, we don't have to do what the Fed does. We can do what Canada needs. I do think, though, we're looking at the same things and asking ourselves the same questions. I think we both need to feel confident that we're clearly back on a path to 2% before it would be appropriate to reduce interest rates. Last week in Canada, we held our policy rate at 5%, where it's been since last summer. We did stress that we are encouraged by the recent progress we've seen on inflation, and we want to see it sustained. And just this morning, Statistics Canada published the March CPI.
If you follow me on Twitter, you should see the post I just posted.
As expected, headline inflation came in close to 3%. We have seen
cocoa.
Gas prices in both our countries move up. Importantly, though, measures of core inflation did tick down again, and that does suggest that underlying inflationary pressures are continuing to ease. So we continue to be moving in the right direction. The other thing I want to underline is that in the conduct of monetary policy, we do spend a lot of time looking and understanding what is going on in the United States. U.S. economy has a very big impact on the Canadian economy. We also watch the U.S. economy closely, particularly through the extraordinary period we've all been through in the last few years.
Big pull at 5,100.
Because the more we understand what we have in common and our differences, the better we can learn from each other's experience.
Interesting.
And let me just close on a few words on just how integrated the Canadian-U.S. economy is.
Okay.
And Randy, you highlighted some of the key facts.
Yeah. Getting some pull from at
totally
5,100.
share your
So
perspective. I think the economic relationship really is the model for mutually beneficial.
yeah, we're seeing some changes here too. Like
77% of Canadian exports flow to the United States. And as you underlined,
yeah, there's a pull. So
less people know is that Canada.
I feel like
is
the early options are kind of signaling here of a move higher.
17%, or as you said, almost 20% of U.S. goods.
Powell hasn't talked
head
yet.
north.
So it's like positioning into what he's
If you look
saying.
at foreign direct investment, there's a
Right, he didn't talk yet, right? I was out for like 5 seconds.
In 2022, more than half of Canadian FDI went to the United States by large.
Mike, Canadian interest rate policy could be interesting as well.
By far the largest share of our FDI. That was roughly $43 billion. In the same year, $50 billion of U.S. FDI came.
It looks like the options market
is a pretty balanced relationship.
And
I think with these
targeting
numbers
higher.
Underline
That's what it looks
how
like.
close that economic relationship
Feel like
is
it's
and how it works in both directions.
wrenches could get thrown, but that's what it
And
what it looks like it's positioning for right now. Is higher.
We face many of the same structural challenges. Our labor forces are aging.
Right around that 505 level. If we
There's
start
going to be a big
pushing
challenge with new technology, training, and making sure we have the skilled workers.
Maybe even tag the upper
needs.
daily expected move. That'd be the
Climate
trade of the
change is
day.
affecting both our economies.
That'd be the trade of the day if we broke
We're
out.
both grappling with shifting
Probably
trade
see some
and
resistance up at the week to day anchor VWAP if that was the case.
Supply chains.
We'll see, because you can we can break down from here. Like the tightness here opens for the door for a nice move up higher. But if you break down, you can respect it, and if it turns back around, you can always
for
reset.
all these reasons, I am very glad we're having.
We got to get through this liquidity overhead.
We do have much in common.
And Jerome Powell, who knows what he's going to say?
When we work together, we can get a lot more done. Thank you.
No, thank you.
Thanks.
Jerome Powell's clap. Get ready for
That's a great
fireworks.
place to start. Jerome Powell,
Jerome's.
really interested in hearing your perspective.
Good job.
Another place to start is to say, why don't you call me Jay and call Tiff?
Okay,
Tiff.
I know I do it behind the scenes. I'll do it in front of
Okay.
the scenes too.
Great. So let me start by thanking Randy and Bill and Xavi and Tiff for this. It's great to be here today. I want to echo what Randy said about the mutually beneficial, respectful, great relationship we have with Canada, economically, culturally.
Hey, what's up, chemist?
And I'd
Haven't
also
seen you
like
here,
to
man.
echo,
Is it?
I thought Tiff did a great job talking about the similarities and differences.
Is this the
in
chemist
our
that I know
economy, our
in the
financial
Discord?
markets, the challenges we face
Or no?
in our policy stance. It's almost as though you somehow had a copy of that part of my remarks, Tiff. So I'm not going to repeat that, but what I will do is talk, if I could, a
Okay,
little bit
that's what I figured.
about the U.S. economy and where we find ourselves right now. So as I think Randy pointed out, the performance of the U.S.
What's up, Richard?
economy over
Thanks,
the past
Oscar.
year has really been quite strong.
Come on, Papa Powell.
We had growth of more than 3% last year
hear him
as
talk.
rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about
Here comes the
our
reaction.
two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong
labor market
demand for
remains
workers
very
has
strong.
been met by a substantial
Nobody believes
increase in
the
the
labor market
workforce
thing,
due
apparently.
both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers
Powell
was
saying the labor
extremely
market is moving
elevated
into
in
better balance
2021
even
and
amidst
22,
ongoing
has now
strength.
moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires.
And broader wage pressures are
also
moderating
continue to
gradually.
moderate,
Market
albeit
says,
gradually.
I don't
So
like
the
what you're
overall
saying.
picture for the labor market is one of real strength.
All right, let's keep an
but
eye here. So
gradual
505 still
normalization.
holding here, still
Turning to
pushing
price
away.
stability,
Got to respect this
our
breakdown of this
inflation
tight
mandate.
contraction.
Inflation, of course, declined quite significantly over the second
What we
half
can
of
do now,
last
while
year,
Ellie's
over the
talking,
whole
is
year,
we can
but
apply
particularly in
an
the
anchored
second
view
half.
up to a smaller
But
time frame.
12-month core PCE inflation, which is one
This
of
is
the
him
most
talking
important
right
things
here.
we look
Large
at,
volatility.
is estimated to have been little changed.
This 12-month
in
core
March.
Play anchor
PCE
view up right
inflation
here.
has little
At
change in
2.8%.
March according to
The 3 and
estimates.
6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that
Below the
inflation is
JWAP,
moving
this little
sustainably
midline right
toward
here.
2% before it would be appropriate to ease policy. You know, we took
So that positioning and
cautious
options are getting
approach
toasted
and,
right now.
sought that
Go-
greater
damn it,
confidence
Coco.
so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent
Powell
data
saying the Fed took a cautious
have clearly
approach
not given
to
us
not
greater
overreact
confidence,
to
and
declines
instead
last year.
indicate that it's
Recent data have
likely to
not
take
Let it
given
do
them
its thing,
greater
people. Let it do
confidence.
its
to
thing.
achieve that
We're
Do
confidence.
hearing
not-
them
do
on
not
that
be
recent
traded
data
in
have
this.
not given
We
them
think
greater
policy
You give up
is
confidence.
all
well
your
positioned
edge
to
trading
handle the risks
into
that we
Jerome
face.
Powell and any
If
earnings
higher
moves and
inflation
stuff
does
like that.
persist, we can
Let it
maintain
play.
the current level of restriction.
We're
for as
watching the
long as
JWAP
needed.
right now.
At the
I don't
same
really
time,
care what
we
he
have
says at this point
significant
now. I'm really
space to
watching market
ease
flow
should
or
the labor market
how the
unexpectedly
market
weaken.
digests this. Okay.
Right
Powell
now,
saying if
given the
high
strength
inflation
of the labor
persists, the Fed
market
can
and the progress
maintain
on
current
inflation so
rates
far,
as
it's
long as
appropriate to
needed.
allow restrictive policy further time to
Restrictive
work
policy
and
needs
let the data
more
and the
time to
evolving
work.
outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Well, thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got
Mark,
into
you can go
public
either
life
way
was
still,
how
people. Just
often
let it
I
digest.
saw my international
Watching the JWAP, still under the
peers,
JWAP.
as we moved around. And when I see the two of you on stage together,
State Department
I
is
know that
commenting on
often
Israel
you
and
see each other
Rafah,
at
saying it's
G7,
still
at
not been
G20
briefed in
meetings.
detail on plans
And
for
I think it'd be
evacuation
quite
from
interesting
Rafah
for
or
the audience to
military
understand,
considerations of
how
potential
collaboration
Israeli
happens or
operations
doesn't
there.
happen internationally, how central banks work together or don't work together. So, maybe I could ask you, Jay, to give
Powell
a
saying it will
perspective
likely take
on
longer
how
for
that,
confidence
how that happens from
after the recent
your
data we've
vantage
seen.
point.
Sure. So to give you an idea, we do meet quite regularly. So Tiff and I
Powell saying it will
attend
likely take longer for them to gain confidence that
G7
inflation is moving
meetings per year
back to
for
target after
ministers,
the recent
finance
data.
ministers and central bank governors. We don't attend the leaders meeting, but we attend in the United States, but we attend the meetings with the finance ministers, which Bill was.
State
And
Department
also
saying they
two
have seen a
G20
significant
meetings. So that's
increase in
that's
the number
4
of
meetings
trucks
per year
getting
right
into
there.
Gaza.
We also have 6 meetings at the Bank for International Settlements in Basel.
I'm gonna
One of
mute
those
the,
is now
guy in the
virtual,
background.
but we're in, and that's only central bankers, no finance ministries. So it's all central banking stuff. And
I'm gonna keep an eye
it's
here on the
economics,
JWAP.
it's financial regulation, all those things. We also come here to Washington, or every 3rd year we go someplace else twice a year for the IMF World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question.
It could very well spike up still.
Essentially,
We're
we,
floating
the
around the
central
JWAP,
bankers,
tightness
are-
taking place
are
right here.
having an
We're gonna
ongoing
probably get a stronger
conversation
move
about what's
very,
going
very
on in
quickly
their
here.
own economies and their own financial markets,
Okay.
their own
Upside, downside, I don't really know,
regulatory
but you want to
world with each other.
reclaim
And
you
we're
want to
also
reclaim
talking
the
about big
JWAP
global issues
when all
of
this
the day,
volume
as
started
you would
coming in.
expect. So
The Jerome
some
weighted
of which
average
are really
price.
the business of the elected government, not
Okay.
the business of the central bankers. But
Contraction
we have
leads to
that
expansion.
discussion.
Getting
It's
very
more or
tight.
less ongoing. We're seeing each other all the
If we
time.
pop up, look for a pop up
They're
to
very
around this range.
informative, these discussions, and they really
think
are,
that's
for
the daily
me anyway,
VWAP,
part
if
of
I'm
the
correct.
way that I get
No, that's
to
the prior swing high anchored VWAP. My
thinking
bad, let me
about what the
remove
right
this.
policy is for the United States, is to hear
Sorry.
what is going on around the world,
Applied
what's
VWAP
happening
here.
globally, and how are people thinking about that. So it's very, very useful.
keep an eye out, 'cause it
particularly,
can
though,
break either
given
way
our
very
close
quickly.
Cultural,
I wouldn't try to make
financial,
too crazy
and
decisions
economic
right now.
ties with Canada. Those discussions are especially fruitful and important, and I have a regular
Sorry, I'll
conversation
show the
with Tiff.
screen
By the
here,
way, I do
but
keep
I'm
very
assuming that
close
we're gonna get a
track
move,
of the
quick move
actions of
here.
the Bank of Canada. I read Tiff's press conference
go.
transcripts carefully and pay close attention to that. Tiff did mention the similarities and differences.
Trading above the JWAP.
I'll say one more thing, which is
Coming into daily VWAP.
we go to Basel, as I mentioned, 5 times a year. You're a long way from home, and there usually is. We're there for 4 or 5 nights, and there usually
Nothing
one
really
or 2
too
nights
significant,
off.
to be quite
So we
honest.
go looking for someone to have dinner with, and
Nothing that we don't
very
know of.
frequently we wind up with the Bank of Canada delegation, who are really good and very funny and a lot of fun together. So we have a very close relationship with the bank and great respect for that institution, as I'll have a little more to say about lately. One other thing I'll point out, though,
I don't get any
about
discounts
our
for Trade the News,
relationship
no.
is
I
we
had to
did
pay full
do,
price.
as Randy pointed out, our first monetary policy, first review of our monetary policy
It's expensive
framework
as heck.
really ever. And
If you guys
we
find it
looked
useful, I'll
around.
keep
Bank
it
of
and I'll keep
Canada
paying for it.
Also does regularly. I think it's every 4 years. In any case,
but it ain't
we,
cheap, man. It ain't
we
cheap.
really looked to the
$300+
Canadian model and
a
other
month, I'd rather
models
just have a new
of how to
car
do that.
at
We
that
talked
point.
to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop there.
And Tiff, similar perspective from Canada?
Yes, I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts about this job is
The Trade
we
the
do-
News
the inter-
software,
the international community,
the live
central banking
feed, it's
community.
pretty expensive
It's not like a commercial bank
very
where
expensive,
you're
actually,
competing against your
for
the
just
other
live
bank.
news.
We're all in this together, and if we get it right, we all help each other.
We're all in this
So
together.
there is a considerable
And
openness.
if you get it wrong,
And, as Jay outlined, I
You're
think
all in
there's
this
a
together.
there's a few different
But no one
approaches.
takes blame.
Yes, obviously, if you're in Canada, we have our own group at the Bank
I
of
turned it
Canada
off.
that-
I turned it
that
off. It's not on
analyzes
right
the
now.
U.S. economy, forecasts the U.S. economy. It's very important to Canada. But, the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to
Do I get a
say
discount during
is
Black Friday?
incredibly
Maybe. I have no
valuable for
idea.
us. The other thing we do, though, is it's
Yeah,
more
Trade the
than
News
just
has a
the
free trial,
data
7
and the
days.
forecasting. It's thinking through the scenarios.
I tried out a
together.
bunch of
What
different
risks are on your
platforms. I
mind,
tried
Jay?
Benzinga
What
Pro.
do
I
you think
tried
could
out
go wrong? What are the scenarios?
Trade the
How-
News, and I
how
tried
would
out
we handle it if
Squawk
this
Box.
happened, if that
Trade the
happened?
News was the best one.
Being able to put your
for
heads
me.
together and think through the risks, the
Benzinga Pro was all
scenarios,
right.
the strategy. There are also a number of really, I would say, sort of behind the scenes, very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately, those are things most people don't have to worry about. They are critically important for the implementation of monetary policy. And that sort of plumbing working of the financial system, and being able to talk to people who are thinking about these things as much as you are
Thanks,
is
Pablo.
hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The
Just
obvious
cancel it.
one would be
Cancel Trade the
financial
News.
supervision
I
and
might.
regulation. Our
is
financial
pricey.
systems globally are highly integrated. We were deeply reminded of this in the global financial crisis. What happens in other countries affects all of us.
So you see what just happened there,
And
guys?
money flows across
Guys,
borders.
gals?
So, we have to
So-
do that together, or it's not going to work.
Whatever this guy's talking about, I don't care.
Well, maybe we can drill into that.
Okay,
for a
so
minute.
do you see
You know,
how
obviously
we anchored a
recognize that
volume-weighted
most
average
of
price
your
to
work
Jerome,
is
so we call that
focused
the
on
JWAP.
domestic markets. But in times of
Jerome
crisis,
weighted average
there's
price.
real challenge, as you
We
mentioned.
flush, you be
in the
patient.
COVID
It
period,
contracted right here, very tight,
global financial
right? That means a move
crisis,
is coming.
that,
Contraction
you
leads
were
to
engaged
expansion.
with
It
Tiff
broke to the
earlier
upside.
in a different stage of your career.
Back through the
And
JWAP.
For me, it was remarkable the number of
Up through the daily.
interactions with
Where did it pull back to?
counterparts around
It's
the world
holding the
during this
JWAP right now.
crisis. So maybe
So you want to
a
hold it.
question
You
to
want to
both of
continue to
you
hold
is,
it.
You know,
You
what
put in
what
a
kind
low,
of interaction happens
a higher
during
low.
periods of
We have a
crisis?
high, a lower high.
What doesn't happen?
So what we can do
are
now
the
is
things
you
that
can
we should
anchor
be thinking
in
about differently in order to prepare ourselves for those challenging moments.
to this
and
swing
making
high,
sure that
and you want to
the
get back
financial
above here.
system's resilient. So again, maybe
Okay.
over to you, Jay,
To maybe come back and retest these
react
highs.
to that and
Right
your
now,
thoughts.
you
Sure. So,
don't want to go under the JWAP.
you know, our
Right.
economies, our financial
Pulls back
markets,
under,
all our
it could
institutions
flush.
are deeply intertwined. And when
Then you'd
when
have to
there
wait
is,
to see if it
a
U-turns in price
situation where
again,
there's
okay?
serious stress.
So right
you
now, it's
need
just
to
kind of
get
pinching
global
between these two.
perspective. You need to get perspective around the world.
Pull JWAP and see
you
kind of how it plays
You have
out.
to do that very quickly, and
Right.
we of course can move quickly and effectively on the domestic
Other
front.
people
but
would see this just
what-
contracting, like
the-
wedging or
the
something
thing
like that, you know?
You figure out in those times is that all the time you spent at Basel and at the
be
G7
nice.
and G20 meetings, you know your colleagues, you know and trust and respect their judgment, and you don't have to go through that phase of gaining trust in people. You understand each other, you speak the same language.
Dixie
so
and the 10-year yield
there's a
higher,
lot of
gold still holding
communication.
up.
The level
Market
of
is,
communication
market is
pretty
very weird
high
right
anyway,
now.
but during crises, it goes
I'll look at those in a
very high.
moment.
You're constantly talking to, I'm constantly talking to other central bankers around the world and also political leaders in our government and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that people are looking at, and you're talking about that. So it's very useful. I say one thing to point out.
Can I just say that,
is
we
it's
just
less
we
about
just
coordination
walked through these moves
than it
actually
is about
almost to
talking and
perfection.
understanding, for one reason, or at least it
I'm
was
not trading
during the
right now,
pandemic,
but
and that
maybe
was
somebody
because
is. I mean, that was
almost
crazy.
every
We
country's
literally were just
interest rates
This
were
is
very
this is
close to
these.
zero
It's not that it's crazy. It's
when
just
the pandemic
this is why
hit.
these
And
levels
so
are
there
so
wasn't
important.
space, there wasn't
And watching
policy
for the
space
contraction
for
and expansion.
most economies, most central banks, to do a big coordinated rate cut.
crazy.
We did cut very quickly to zero, but I think we were higher than almost any other nation in terms of where our policy rate was. But anyway, there's
All right,
a
while this
lot
is
of
playing around,
communication
we're back
and
above this little
those
swing high, got another high, so we
relationships that you
have
built up
boom, boom,
really
boom,
do,
boom. I would say it's
help at that point.
come back up to this target here,
in terms
and then we'll
of
see what price does.
You asked about learning. What have we learned?
Jerome's in the background.
I think that the
I wanna
pandemic's
take a
going to
look
teach
here.
a whole lot of lessons over time.
book
I
map.
still think it's too early to say what they are with confidence. And
Still have
I'll
that stuff
point out, look,
overhead, so we still haven't
the pandemic
acquired,
has surprised us
gobbled that up.
over and over again.
liquidity
most recently
overhead,
by
okay,
the
but
United
it's-
States, the remarkably strong performance.
It's in
of the
striking
economy
distance,
at a
and
time
we
when
had a lot of
virtually all
zero
economists
date
were
kind of
expecting a recession.
we had a zero date kind of
So I think if you'd
positioning
asked
to
for the
come fill
lessons
that
of the
out.
pandemic
Fill that out.
a year and a half ago, you'd get a very different answer. Now, I think in a year or so, we'll have a lot more answers. It is a unique set of circumstances.
10-year
and
yield
we're
up.
still learning, I think, but we will
Coming
try to
down a
learn
little
those
bit here,
lessons.
but it was just roughly at the
Different
high of
point, I
day.
would say, about the bank stresses, another crisis, at least here in the States.
Dollar, huge
I
move
do
in the dollar,
think
but that's
we
reverting back,
can
which
have
probably
learned
could be
the
helping
lessons
gold.
of the
See what gold's
stress
doing.
of early last spring.
Not
And
much. Okay.
I would point to a couple things that
That
we
big fall off in the
embraced
dollar
pretty
tells me if
forthrightly.
the dollar
One
comes
was
off,
that
we can see this.
supervision
We can see this come fill it.
was not tightly focused on
That's
the
kind of-
right
that's how
things,
options
was
were
not
positioned going into
proactive
this
enough,
event.
was not forceful enough, and we've tried to take steps to remedy that.
Keep watching.
I also think there will be
Contracting,
some regulatory
contracting,
initiatives
contracting,
for
contracting.
banks of that size and with those characteristics. In
Another
time.
move coming.
So I do think those are lessons.
We're
that-
holding
that
this daily
we
VWAP,
have
so
learned.
my guess is with the higher lows, it would be to
perspective,
pop to the upside, but if it
similar
cracks
lessons
underneath,
or
just watch
different
out.
ones?
Yes, I
Respect
think
it if you're
there are
trading.
Similar lessons. Maybe I'll just give a couple of other examples. First though, I will just underline, when a crisis hits, you're faced with a situation, you have to make decisions, and you have very limited information. The other reality is you have a pretty narrow window
Getting
to
tight.
act to be really effective.
Getting tight.
And for both those reasons, being
We can
able
watch this little
to-
VWAP right here from this swing high.
directly to Jay.
Got to get above here.
To connect with our other colleagues, finding out what's happening in their jurisdiction, how are they
I'm gonna
thinking
remove this
about it,
one.
what do they see as the options? It is hugely important in
I'm
a
going to
crisis.
remove this one,
And
and I'm going to apply
that
one to the swing low.
it's a little more though than just information
Okay.
sharing. I mean, I think it helps us avoid unintended
So
consequences.
the
of
swing
our
low,
actions.
anchor
Sometimes
VWAP
you
is
do
holding, so
something
this would be the
and it
more
works for most
substantial
parties, but not one
level that
party,
you want to
and in a
hold.
crisis,
Okay.
it's the weakest link.
Right
that
now,
can
price
take you
action,
down. So you
getting very
gotta be
tight here.
Careful. It also, I think, boosts
Back up to the
confidence in
505
system.
level.
If we're acting in a way that is coherent together,
Still
it boosts confidence.
Plenty of liquidity overhead that needs to get resolved.
It looks
or,
more like a plan than a haphazard policy
absorbed.
response. Just to give you a couple of examples.
Any guess right now? It's
I
anybody's
wasn't
guess.
actually governor at the start of COVID. Jay was there.
Getting
certainly
tight, it's
looking at
breaking
it from
down
that
to this
side,
consolidation. Couldn't
the
quite get above this little swing high anchor
coordinated
VWAP.
actions of major central banks
Watch
to,
down here.
to reopen fixed income markets.
If it breaks this swing
providing
low,
liquidity, providing
careful,
market
'cause then
making
they can
of
start
last resort
targeting
in
lower.
scale.
Still holding up.
It restarted, reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted.
As far
If
as
that
trade
had
right
not
now,
happened,
I'm
this
still
crisis
not
would
I'm
have
still not
been
going
a
for this.
much deeper and more severe
I'll just let the
crisis.
market digest.
And then the other one I'll highlight is coping with the inflation as we came out of COVID. By all being resolute in our commitment to restoring price stability, by all matching our words with forceful action,
Thanks, Craig.
raising rates rapidly. We all helped each other. I mean, it helped reduce global inflation in
Market
goods,
flow
which
not
was really the
flowing.
first part of the inflation surge.
Give it a second, guys. Give it a
and
second. It's still
it
holding up
helped
the swing low
keep
from JWAP,
inflation
from Jerome weighted
expectations
average
in
price.
all
It's
our
holding this
countries
low. It's just
better
not a
anchored.
bad thing.
And I think it is a key ingredient in how we have all managed to get inflation down.
It's more concerning
a
if we
long
start
way back
breaking it.
without causing recessions in our economies.
Right.
And the last point I'll just
And if I
highlight
started
is something
when
you
he
said.
started talking, when we started seeing that action,
Occasionally
we're above that too. So this area is still
coordination
supportive,
very
and you can see the
exploited.
price
So,
is
for
holding
example,
that.
At the time of the global
Okay.
financial crisis, there was a coordinated
It's not-
G7
it's not
interest
bearish right
rate
here.
cut.
Not
I
yet.
remember clearly because it happened
turn.
at 3 o'clock in the morning
Quick.
in Canada.
It's just not there yet.
Which was a little bit of a technical challenge.
That's why I don't. The options they
but most
position
of the
themselves to
time,
be
it's
higher
not
into this
explicit
event.
coordination,
You
but
you
it
pointed
is
out, but then you
those
get this quick flush.
conversations. It
So
is
let's
that
see.
shared
Let's just.
information.
And
We
they
have
were positioning
similar
themselves at
objectives,
like
similar goals,
5105,
similar
50,
tools,
5100 or
and
whatever.
we're sharing information.
We'll see.
and
Actually,
that leads
let's
to a
update that while this guy
coordinated
talks.
response.
Well, maybe you could
Okay, let me while that guy's going. Yeah, but market flow is not giving us anything. Let's take a look here at SPY. Strike 500. Oof, magnet out to 500. Yeah, nothing looks. Ugh. Yeah, if I had some sort of edge here, I'd say let's trade it, but I don't see a good edge, right? I don't see a good edge here. Let me put this back on.
deliberations and how that factors into decision making, the U.S. approach.
Still holding,
Well, look,
but careful.
I think
That's
it's
the
pretty
daily
clear.
VWAP and the swing low.
Our U.S. economic relationship is by
Jerome weighted
far
average
our
price.
most important relationship. Our economies are highly
The
integrated.
JWAP, yeah.
35% of our GDP is exports, and 75% of that goes to the
I know.
United States. So multiply, that's a big chunk of our GDP. Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York
Still
Stock
really kind of
Exchange,
holding this little swing
and,
high anchored
all
VWAP here.
over our,
Price action now is pinching
cross-listed
between this
Canadian
prior swing
companies
high
on
and the swing
many
low.
of the screens. Our financial systems are very integrated. Our banks have
holds, it holds,
most
it
of our large
holds.
banks have
testing it
operations
again.
in the United States. Our
So
pension
if it
funds are
breaks,
big
careful,
investors,
careful on a break.
in the
And
United
then what you want, you really want to see it potentially
So
U-turn back.
We do spend a lot
but
of
just
time
careful because these
understanding
flushes
what's
can
going
get
on,
dramatic.
Trying to understand what's going on in the United States and looking at the implications for Canada. There are, though, I highlighted in my opening remarks some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors, but the commodity sector in the Canadian economy is quite a bit bigger than
Barb.
it is in the United
Barbara.
States. Oil and gas, agriculture, forestry, mining.
Bear flag, yeah, it could be a bear
fishing.
flag.
40% of our exports.
Kind of
13%
retraced
our
most of this though,
GDP.
so I can see like kind of like a wedge,
And
like a flag. Yeah,
the
I get what
commodity
you're saying
cycle
there.
can be
But
quite
just watch
different.
the breakdown here. 'Cause it's starting to break here, so you want to. It's
We have a
doodling, but
flexible
if it
exchange
breaks
rate,
here,
that does
careful
help
because now you'd
absorb
expand to the
the
downside.
differences.
We're tagging the upper
And I think it's an important
opening
reason
range right
why
now.
Historically, sometimes our
first
monetary
30-second opening
policies
range in the NQ.
do differ. Our cycles are often quite similar, and certainly through COVID, we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where particularly if
call
the
out, Kyle?
commodity cycle is different, you'll see monetary policy diverge somewhat from the United States.
We
There
want
are
Jay Powell to
limits
talk. Come on
how
now.
far it can diverge, but as I emphasized, we have our own currency, we have a flexible exchange rate, and that absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S.
Yeah.
has an outsized role in
I need more
the
water.
global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, And how much do you think about
High yield did not put in a lower low
what's happening
on
with
the
global
JPOW move.
markets as you come to your conclusions?
So
Interesting.
I'll start by saying that each central bank serves a domestic mandate, which is, in the case of Fed, is using our tools to achieve maximum employment and price stability for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on not just on Canada, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of
There was
all
an
of that.
expansionary move there.
And
Back into the daily
for one
opening
thing,
range.
we try to
We
be
broke
very
that swing
transparent and
low
predictable,
JWAP right
given
there.
the
So
flow-
you want to reclaim these
given the
levels,
flow of
potentially
data
look for a
and facts, I mean,
U-turn.
You have to move quickly sometimes, but we do
Trade is
realize we
fast
have
and
a
wild
special
right now.
obligation to be predictable
give it
and
time, 'cause
transparent,
I said
and
you
that
do these
benefits
snaps,
us in doing
snapbacks.
that as well. So international
right now it broke
spillovers,
down,
of course,
so
are an important
you wanna see that
consideration.
reclaimed.
We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum employment
SPX still
here in
getting
the
hung up
United
at that
States.
505 level.
And is that, have there been changes in this current cycle that have driven any differences? I mean, you've talked about the different drivers for inflation
Book to
this
boot.
go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation,
Andreas,
I do think
in
this is
the
different.
stock
This is
market
not
indicators
simply the
channel,
more standard case
under the
of
figuring out money
overheated
like tab,
demand, which has
if
been
you
the typical
scroll
thing in
to
the post-war
number
era
1
for-
on signal
for the
charts, it
US
says
economy
sailor
and
to
other
shift.
major Western economies.
It's there.
There are similarities and differences, and I would characterize it this way: that the inflation that arose suddenly, really in the early part
I
of
see you, Jerry,
2021,
talking in the
as
Discord, asking the
economies
question now.
reopened, resulted both from
I'll
constrained
tag
supply
you on-
and also
on it.
elevated and rechanneled demand from services to goods. So if you remember, and you I'm sure will, there were unexpected widespread shortages and supply chain failures on a scale not seen in recent memory. In the U.S., several million people had left the labor force, creating a severe labor
we go.
shortage.
I just
that
tagged
was
you in it.
More fully
It's number
felt
1.
once the economy reopened,
welcome.
leading to a huge spike in wages, but also in the ratio of job openings to unemployed workers. So,
All right, so what do we got
very
going on here?
unusual situation. Households had elevated
The
levels
swing
of
low anchored
savings,
VWAP was
and demand
holding, but it was
very, very strong
broken.
as well. So
Swing
we
low from
thought
when Jerome
that
started talking.
what's
So that
different
means
is
it's below when he
we
started
thought-
talking and below
have
the
thought
swing low.
since
And we're getting that
we
expansionary move to the
understood
downside,
situation,
retesting the
that
lower
restoring
opening
price
range there on
stability would
NQ.
require both
Okay, that's
the
not a good sign.
unwinding
We're
of the
cracking around that
pandemic-related
50-50
distortions to both
area gamma
supply and
level.
demand, as well as the effect
So,
of tight
careful here.
monetary policy on demand, which would give the supply side
If we get
time
a
and
new low,
space
I want to
recover.
re-change this
And we
up.
think today that we're seeing those
Now
two
you
things
really want to
working
see these
together
these
to
levels
bring that
reclaimed,
end about.
or the sell side can
And
obviously
you saw that, I think, in 2023,
intensify.
which
Where
was
to?
really,
Right now we just have an inside trading
in a
candle.
large way, a supply side
Market net
story.
flow is not giving us
What
much,
happened was,
so it could be a lot of
the supply
chop. We
side
can
really
snap right
recovered in
back.
2023.
It's not
We
giving us a
thought
good
that it would
edge.
recover in
Zero date
2021.
has been the same exact level
And
all day, 50-15,
2022,
50-10,
I was
and then the
beginning to
upside
lose
was
hope, and in
51.05 for the target,
2023,
51.10
you
for
saw
the target there.
shortages and the issues with
But
the
really, I mean,
trade
we're
pipelines.
down a little bit
Not
near the
fully
lows of the
resolved,
day.
but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people
Range
who
day.
had dropped out of the
We'll see if
workforce,
this
but
turns into
also
anything
from
bigger.
immigration. So that was the year.
But to be more
of the
positive, I'd want this
supply side
obviously back
recovery.
above these levels over
And
here.
you saw the core inflation rates drop.
So I'm
by
not trying to
2
catch these
percentage
dips. I'm not
points
even really trying to
in the
trade this
face of
stuff.
very
I'll
strong
let you know
growth.
if I'm
So
trying
that
to
can
get a little bit
only
more
be
aggressive or trade
explained
something,
by
but it just,
the
I
enormous
can't, nothing all
increase in
day.
potential
There's
output,
no point
the supply side
There's no
increase
point
over that year.
for me to put some capital
so
at risk.
that's how I would
unless
say it's
maybe some
different
swing
this
trades
time.
open up or whatever.
And Tiff, maybe you can tell us how it's different in other ways in Canada. So we were talking about the similarities and the similar approaches to dealing with inflation and the positive results. But we've seen a divergence in Canada with respect
Can I
to
show the
growth.
book map? Yeah, I can
so
show the book map.
clearly
Let's show the
there's
book map.
some differences.
Book
too.
map,
Maybe
these levels, this
can you
liquidity
reflect
still hasn't
for-
been filled.
For
We
people,
tried to go for it a couple
what
of
those
times.
differences look like and what the ramifications
Beneath
are
us,
for you.
Yeah, I will focus on the differences, although I will stress.
Beneath us is the 50-55.
The main story
That's a
is
kind of a
the
more
similarities
substantial level there. 569
and as
contracts.
Jay outlined.
We need to really get through this.
What
And
is
like I
so
said, it's
unique
just going
about this
sideways. So
whole
you're seeing a little bit of
cycle is that
volatility here. Oh, there's something going
Supply
right. Here we
has
go.
played
We're turning back
a
up here.
much bigger role than we're used to. And
Little,
from a
little
monetary
flush
policy
there.
perspective,
Okay. See if this
we
turns
don't
into
have
anything.
as good line of sight to supply as we do as demand, and we don't have any tools to influence supply.
They're not gonna make
Our
this easy.
tools work on demand.
All right. So now I'm going to actually remove
in terms
this
of what
while
has
this is
been
loading. I'm going to
different,
now, because this
if
is a
you
higher
look at
low here,
the Canadian economy,
and it's
growth,
somewhat substantial given the
was
context of this
essentially
move.
zero in the second half.
So
of
now
last
what we'll
year.
do is we'll just track it.
And what that meant was the economy,
Right
which
there.
was very overheated, supply caught up with demand. In fact, it more than
So price
caught
is
up
still
with
below
demand.
this
The economy
swing, this
moved
little swing
into
high
excess
from the
supply,
Jerome
and
announcement.
we're now seeing the effects
And now we have
of that
this
in
higher
terms
low
of
from this point.
relieving price pressure. So, why did demand slow more in Canada, United
That was
States?
a
I
nice
think,
volume bar.
that is a difficult question. I pointed to a
So
couple
break
of
of
things
this.
in my opening remarks. I think productivity
right-
growth in the United States has been a lot
We're
stronger.
right at
You've
the
gotten
opening range
more
still. We're
supply than
below-
we
we're
have, so you've been able to grow more
we're-
with less inflation.
We're literally trading where the first
or
30
less
seconds was.
inflationary
We're right
pressure.
there. I'm going to remove
And then
this
the
daily
second thing
VWAP
is I think
so you
monetary
can see a little
policy
bit
is
clearer. It's
having
right
more
here.
traction in Canada because the structure of our mortgage
Okay.
markets, half of mortgages have renewed
Zooming in.
Canada. And
I'm watching
even if
just
your
very,
mortgage
very small
hasn't
time frames to
renewed,
see if anything
it's
coils up and tightens up, and then we
renewing in
can
the
look
next couple of
look out a
years
little bit
probably.
further
So
on bigger
you're
time frames.
thinking ahead, thinking, when it renews, I'm going to have to be paying a lot more on my
Leading
mortgage
into
every
this,
month, so
traders were
maybe I
reaching
should
out
save
higher.
more money now. So we're seeing
And they still might be
that
right.
effect. We've
It's
had
not like they're
weaker
wrong right now.
consumption
There's
growth.
really no change really since you started speaking.
And certainly that's
Slightly
been
down,
somewhat masked
slightly
by the
down.
fact we've had very rapid population growth. But if you look on a per capita basis,
Price
you
tightening
can
up
see,
here within the last 30-second
spending
bar over
per-
here.
per capita per family is actually
Price is pinching
gone
between the
down,
swing low and this prior
even
swing
though
high.
Growth.
Here comes
has
another
not
move
been negative
in probably
overall.
the very near future.
I think,
Upside or
moving
downside, I'm not too
forward,
sure, but you would think that
we are
a
actually
big volume
seeing
bar,
growth starting to
volume
pick up.
declining, trading around
The
this
first
VWAP,
quarter
you'd
of
get
this year was
potentially
pretty
follow
strong.
through.
Probably see some choppiness quarter
if it
to
starts breaking
quarter,
down here,
but
then
overall,
once again,
we think that strength we're seeing in the first quarter
let it
will
do
be
its thing.
sustained through the year, where we think on a quarterly basis, growth is going to be averaging about 2% per quarter through this year. That's partly we're starting to see some pickup in consumption.
910 on NQ seems to be kind of this hung up
Partly it
area.
is the resilience of
Hung
the
up,
US
hung
economy.
up.
That is supporting our
Hung up here.
exports. They've been very resilient. And then coming back to inflation, I think those, broadly speaking, the path of inflation.
The 30-second
is pretty
opening range,
similar,
that I'm
but
using,
you are
I am
seeing,
using-
I think some of those
don't know,
differences
what
in
am I
the
using?
dynamics of the real economy in inflation.
30-second opening range
Our last
is
few
the name of it.
inflation readings have been reasonably good.
I think it's a premium
even though
subscription.
Totals still close to 3. Core
If you
has
have premium
been
subscription on TradingView,
the
I
last
think you
few
can use it.
times ticking down, and if you look at the more timely,
So it's
3-month
holding that swing
measures
low anchor VWAP
of
right
core
here.
Inflation,
That's a
there is some
positive
downward
sign.
Momentum
It's good that
in
that's actually
underlying
acting
inflation,
correctly.
And I think that reflects the fact
Now, if it
the
breaks,
economy is in excess supply, and that
it's
is
more data to
relieving
tell you
those price pressures.
something, right?
We're certainly looking for evidence that's going to be sustained.
I don't know what
That's
this guy's
we're
talking
looking
about.
for right now.
I'm just watching price action.
Well, I know that
I care more about what
that
Jerome
both of
comes
you
out and
realize
says.
that one of the key things we were trying to emphasize today was the importance of the Canada-U.S. relationship, and I also really appreciate all of the comments on the importance of trade to both of our economies, trade between our two countries, and foreign direct investment. And so,
Yeah, monetary policy.
while you're not trade policy experts, and I get that your organizations, that's not the focus.
Still getting
I
pretty
really
tight here
appreciate
within
you
that
giving us
last,
a little
that one
sense of, how do you
30-second
think
bar.
about,
It's gonna make a move
trade
again. So we're trading within this
economic terms
130-second
and the
bar here,
importance of that,
and you can just see
and,
price contracting
how that
within
factors into
these
your-
two
your
levels, the
economic
swing
outlook.
high,
And
swing
specifically,
low.
we're
It's pinching.
thinking
We're gonna
about
get a
the
move here.
importance of
It's gonna happen.
The agreement between the United States, Canada, and Mexico.
So don't be shocked when all of a
Wondering
sudden we
how
get
you
a,
think about that in terms of its impacts on on trade in
another
general,
big
on labor
large
markets,
range
on supply.
30-second bar that could be 10, 20
So maybe
points
I
or
could-
whatever.
I could ask you,
Downside,
Jay,
upside,
to
I don't
give
know.
us
We
any
need to clear these
reflections you
levels.
might have on that and deliberations impacts.
So I guess I need to start by saying we don't do trade policy. We don't really comment on trade policy other than to say that
The anchored
it's
VWAP I'm
clear
using on
that we have
TradingView is
a
actually
mutually
on the TradingView
beneficial,
platform. It's not an
large,
indicator.
substantial, ongoing,
You go
healthy
to
trade relationship with
this
Canada
part
that
right
we
here,
very much welcome. Maybe I'll
where it has
add
all
one
these
more
tools and
thing,
it says
which is
volume-based,
I want to focus on a
and I just click
particular
that.
export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough of it. and that is Canadian comedians and comic actors. I started to count the number of really great, funny people, and I limited myself to 10. So Jim Carrey, Martin Short, John Candy, Mike Myers, Norm Macdonald, Rick Moranis, Dan Aykroyd, Catherine O'Hara,
Market's
and
gonna love
Andrea
this.
Martin. And I could go on. So something's going on up there. The Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
That's a small but important part of our trading relationship, I guess. Tiff,
So
all jokes
random,
aside,
dude. It's funny.
any comments from your perspective?
You're welcome, short
Yeah,
man.
well, first of all, as Jay underlined, we don't set trade policy, but let me just say, sort of try to give you more of a picture. I mean, first of all, you just look at our two countries. The east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country. And
What are they talking
that's
about?
really
Literally,
comes down to geography.
come to
So
watch Jerome Powell talk, and we're talking
that's
about like
fundamental to the
Canadian
interties
comedians.
we have across our countries. Many Canadians
So
are
Mike calls and he
closer
makes
to
a joke? I guess
fellow
so.
Americans than they are to fellow Canadians. Just the
funny.
nature of the geography. You look at what are the things that we buy and sell? Well, some of the biggest things in Canada.
Too
we
offended
buy
to
a
enjoy
lot
these
of your
comedians.
consumer goods in the United States. We have a very
Seems that way sometimes, huh?
two-way relationship on motor vehicles. You buy a lot of the motor vehicles we produce.
I love watching The
We buy
Office.
a lot of cars and trucks
And
that you
like,
produce.
it's just so funny because I'm like,
Similarly,
how is this the
energy.
number one watch show? But yet all I
We're
see out
both
like on
energy
Twitter and
producers.
like forums is like,
It often makes more sense to
you know,
trade the
everyone
energy
against, like, all
north-south
these
than
type of
to
jokes,
ship
but
it
it's like-
across the country. So we have a very
it's too funny.
dynamic two-way
too funny not to laugh.
energy relationship. And you
Office
look
is
forward
great.
and you think about how much electricity the
good.
world's going to need. I expect that relationship is only going to grow. Another element that is growing
Yeah, can I check
quickly,
SPX?
and maybe
What
that's
part of SPX?
partly
I'm gonna check it.
Canadians is
It's right
the
here,
fastest part
on the left side of the
growing-
screen.
The
It's just
fastest
chopping
growing
around.
part of trade is trade and services. Now, if you want a haircut, you still have to do it in your own country, unless you want to go to New York to get a really fancy one. But but increasingly, a lot of services are highly tradable. The internet has completely changed how many things are delivered, and so you're seeing Canadians are increasingly importing a lot of commercial services from the United States. And then the final thing I'll say is on USMCA.
I wonder if Jerome's taking questions, like outside of the
Obviously,
panel.
for both countries, the market access
By reporters.
is key. The other thing I would underline, though, it's also the certainty about the market access. The certainty that American companies have that they'll have access to Canadian markets and Canadians will have access to American markets. That
Again,
allows
still trading within this
businesses
30-second bar
to
over
make
here, people.
investments,
Boom, boom.
deploy
Now we're kind
their
of breaking,
risk
or
capital,
kind of around that
to
swing low.
commit to the
It's just
future.
trading within this, so
And
price action is
it's
getting
that-
tight here.
It's that certainty of access.
If you look out a little
that
bit
is
further,
really
I mean, it's also tight right
key
here too.
to building investment. I'll stop there.
And a bigger structure.
Well, I'd like to thank both of you for taking some time with all of us. I think if we had looked back a couple of years ago and reflected on what we were thinking back then might be the trajectory.
They're adding
of our
liquidity too
economies.
overhead,
We probably
which is not
wouldn't
fun.
have had
We
an
need to
expectation
absorb
that
this
we would
stuff,
have
and the
been
bulls
where
need
we
to
are
step
today.
in.
We
It's
would
like,
have
it's like they're afraid to
expected
just
more
like
challenges
come
than
into this.
we've
but-
faced. And I think we need to recognize that the stewardship that the Federal Reserve
I think it's ending right
in the
now. It
United
should be
States
close
and
over. I
Bank
didn't
of
see an
Canada
end
and
date or how
Canada
long it was.
have been responsible for has made an enormous difference in citizens' lives. I mean, we're in a situation
The
that,
market really
is
did start
virtually our
reaching for
best case
calls going
scenario.
into this.
So
You could
it's,
see that there from
probably
just
not
the
often enough that on stage you're recognized for that important
From
work.
here.
And I want to thank both.
now
of
there's
you
a magnet
for
at
all that you're
507,
doing
which is
for,
above us. Like there's a
all of
big old
us
magnet.
in
Like I
making
feel like
that
if this
a reality.
ends, man, they can.
And also, I want to thank you
this
for
thing
taking
go.
some time here.
Like-
we are reflecting on the fact
Market net
that
flow is
in
what's
a couple of
confusing me here,
years,
but,
the U.S.-Mexico
just-
Canadian trade agreement
We have a
will be looked
couple
at
large
again,
tails
and we
here,
want to
still under
reinforce the
505.
importance of working together, the importance of
I
collaboration.
mean, this thing's
and
looking like it's
cooperation,
once this ends.
and
I think
really great
it.
trading relationships.
we're gonna get our
So,
move.
this is an important
Trying
way
to get
for
back
us to
above this
start
swing
off.
high, this prior swing high
Seeing
anchor
the
view up here.
collegiality
It's a
between
positive
the two
sign,
of
and
you,
we're
knowing how
we're breaking
how well
above
people
this
work
can.
together
Oh, no, not yet.
is,
Oh, no, are we?
is really important for people. So
We've been trading within
thank
this
you very
candle
much,
for a minute here.
and I know it's a busy week for you.
can't tell
so
if we just broke
appreciate
above
also
it.
taking the time during this busy week.
Kind of. It's like matching highs, I think. Looks like we're 17.5. No,
from
it
the,
didn't. It's
Canada
still
Institute,
trading
I
within
ask
that candle.
Xavi Delgado to close off our session today.
Thank you, Bill. That concludes today's program, everybody. Thank you all, everybody in the room and online, for joining us today. I also want to give a thanks to our very esteemed panelists and our co-chairs, as well as the Canada Institute Director, Christopher Sands.
I'm just
whose
waiting for
vision
just
we
Jerome
were all
Powell
lucky
just to
enough
say something
execute on
random.
here. Folks, we're going to ask that you
One
stay
quick
seated
note,
while the
dude,
panelists
right before
depart the
signing
stage.
off.
But just one last time, this has been the
Just
launch
in
of the
case.
Washington Forum on the Canadian economy. Thank you all very much for
All right,
joining
it looks
us.
like
One
it's
last
setting
round
up
of
right
applause
here.
for
Just
our panelists, please.
why this ends. Maybe the market's just kind of waiting for this to close off. Watch Jerome Powell just really lean into the mic and be like, "Game over." All right, there, it's over. So big nothing burger. Market's now probably free to make its run, do whatever it wants to do. Maybe it's been preparing for this all day. We're back above this swing high anchor view up, allowing the market to move a little bit higher here. We still got to clear this stuff up overhead. So we still got that overhead. Watching it break through this, that's a more positive sign. Let's take a look at market net flow. Market net flow is not giving us any edge really here. So if I go back to 0 date, I mean the same 0 date levels is the same range. How we've been through it, all day. Okay. Just not much, man. Not much. If there was something clean and clear, I'd say let's do this. But I mean, it looks like it wants to go higher, but we have 505 that's been a little pain in the bud. And then we have on Bookmap, these little levels over here. Let loose and run. Down 57%. What did you take, Don? Calls? Like 0 day calls or something? Somebody. Let's go. All right. Let's see if these traders that started off early reaching were on the right side. We're still below this swing high, but we got back above that swing high anchor view up. And you can see once we broke this high, that really allowed for the move to take place here. This longer period of contract, well, not really long, right? We're looking at 30-second candles. But notice how it traded within that for quite some time, just getting tighter and tighter. Kind of opened the door as we cleared these levels, right? And it held this swing low anchor view up that entire time there. Okay? Let's go. Let's go to 5,100. Let's do it. Let's get your 0 dates to print there, buddy. Let's make it happen. Yeah, market net flow is dead. It's not giving us anything today, so it's a lot of chop, but I think we can go off of our gamma levels, and if we can start breaking these levels here, I think that's enough information for us. It's not enough for like me to get too aggressive, but when you get very tactical and you look at these anchor VWAPs, like, I mean, that was pretty clean, right? That was pretty clean. How are you down right now, dude? You should be up now if you got calls. Which one did you reach for? That was the run, man. Let's go. Go, baby, go. Should I be in my rocket ship? Or is it too late now? That's what I'm talking about, baby. I don't have a Telegram group. I have a Discord, but I'm live here often. What are you showing me right now? What the? Give me the baby. I want to say hi. Can I get dressed real quick? No, you gotta take him. Little man wants to come say hi. Future little banker. I'm gonna give out free money. for cheap prices. Here we go. The good luck charm. Dang, you weigh a lot now, dude. Get out of here, Stinky. Let's go, man. Get in the rocket ship. Okay. Love you too. All right, people. Come on. Let's see some ones in the chat if you thought that was a good analysis as we were going through that. If it was proper preparation, if we marked it right, if you caught the move, if you didn't catch the move. Just because I'm not trading doesn't mean that y'all can't trade. Come on. Come on. Like, let's get some love here. That was mapped out. We watched this move good, this move good. We watched this move. Come on. Been waiting for that break of 505 and we said to 506 maybe the week to date. This is something that we've been watching pretty much for the entire day. Let's go. Come on. There we go. There we go. What a move. This is what preparation does. This is what patience does. If you would have just traded this entire time, you know, you would have been chopped up. You maybe would have missed out. But once you're patient, once you watch these key levels, once you anchor to the right areas, once you play bullish above the opening range and so forth, you get some good moves. Look at that. That was good. Come on now. Let's go. Thanks, Don. Thanks, Mike. Let's go, Don. Let's get you printed, man. Let's go to 5100 in SPX. This is actually what traders were reaching for, right? This is what, you know, even Trader Joe pointed it out. He was like, dude, look at the pull on SPX. It was happening, right? In the zero dates, What happened all day today? All day it was saying 5100, 5105, but it also said 5015. So, right, we're seeing the move, okay? We're seeing the move, people, to the upside. So it's not something that I would say fade. It's something that I'd say watch for levels because we can go up higher. But remember, market net flow, it's not giving us any data here, okay? So we're in negative gamma territory, which means we can get buying into buying, selling into selling. Okay, so make sure you're, you know, still managing risk, right? Still manage risk. All right? Because anything could happen. Anything could happen. But that was a beautiful move there. Strong, big, bulky move. Coco's biting my ankles right now. Short it, short it, short it. Ah! Margin call, margin call. Thanks, Raj. I don't know if I'm pronouncing that, Raj. Negative 68 to positive 30%. There you go, man. Good stuff. Good stuff. There we go. See, if you would have got out early, like if you're doing zero dates, it's kind of like a set it, forget it sort of move, and you want to catch that move, you know? On zero dates, I really would target like 300%, 4 or 5, you know, maybe even more percent. Because you're going to have a lot of minus 100% on zero dates. So if you have like 4 negatives, you want at least one that can like be 500% gainer and like make up for all of that stuff. I don't trade zero dates, but that's how I would think about it, right? All right, so market's still pressing here. Let's take a look here. We did fill this. Now we did get some added liquidity overhead. All right, they're starting to step back in over here. Like 500 contracts. They're like, oh no, they got us. Now they moved up here. See if they're any further. 5150, 300. That's been there for a little bit longer, so I'd say that'd be more of a focus area. Although, albeit this is a little bit bigger, but that would be more of a focus in area right there. So as they add this, what's happening here? You wouldn't know that they added this if you're just looking at a candlestick chart. So now buyers need to just, they're digesting. So what can we do? What can we do here? As buyers, as it ran up and buyers are digesting, you can anchor. And you can really too, you can anchor from this breakout point here when the move started, which is, I would say the move started kind of like right here, where you get this like kind of volume move here, or maybe even here on this breakout. A couple of ways you can do that. Like it just depends on your risk, but if you go like that, it's under it. So that means more downside, or potential, right? Unless it moves up. You can keep it here, or you can do the breakout candle, or this swing low right here. Like this pass off right here. So if I go like this. So I like that. I like that look. So see how it did a low, a higher low, and then basically a higher low right here. And then we broke out. This is where the anchor VWAP is from that point. So we're pulling back into this area. So careful as it's cracking these levels. Now the swing high. See how breaking and flushing. Now you want to get back above this swing high anchor VWAP. This one I'm going to remove. Excuse me. Excuse me. Thanks, Don Pablo. Appreciate it. All right, we're cracking back those levels. Getting just some volatility. Market's digesting what it just did. It was a big run. Now we're testing this prior swing low, anchor VWAP. So careful there. Let's take a look at Bookmap, see if there's any supporting bids. No, they're actually adding overhead still. You see how they're walking price down? We'll see if that changes, but it's kind of like driving into the daily VWAP. So these guys came in right here, and then as soon as that happened, the market said, ah, and you can see they're still adding over here. And this is quite typical price action. That's why you got to be a little bit more fast to respond when you have market net flow that looks like this. Under the zero line, choppy, right? So you got to be somewhat aggressive on this type of moves. Back under this swing low anchored VWAP right here. So now I'm going to go ahead and remove this. We're under this breakout anchor VWAP. I'm going to remove that. And now if we start bouncing, then I'm going to anchor a VWAP to the low. So if I see a strong candle to the upside, then I'm going to be watching this swing high, and then whatever the swing low is, wherever price comes down to, and see if price action starts to consolidate and pinch through that, like so, something like that, and then watch for another potential breakout. You said seller rip, yeah. I'm not a short seller in these type of environments, but given the context of market net flow, yeah, I mean this is typical price action. But you just want to be, like I said, you want to be more aggressive. You want to take profits. You want to understand that, like, hey, if you're making moves, you want to still manage risk. So definitely, if you made this trade right here, and you managed to catch that move, it shouldn't be a break-even trade. This was a very large move. We're talking, if you're trading futures, we'll call it 90, 890, almost 100-point move. That's almost a 100-point move. You know what I'm saying? So you don't want to just let a 100-point move, if you're day trading intraday, to go back to break even. All right. Still underneath the swing high anchored VWAP here. That'd be the one to focus in on. If we get some sort of bounce, that would be the target area. Boom, right up. And then I would like to see it consolidate and tighten back up again. But we haven't seen a bounce. Maybe I can refuel the rocket ship and use the rocket ship this time around. I appreciate that, Sam. Thanks. Let's take a look at market net flow. We do have convergence. It's under the zero line, and I like it to be at above zero. I really do. I prefer it to be, like, we're getting positive convergence, positive divergence. I prefer the green line to be above zero. 507 is the magnet. 502, 504. We're under that. And we're back right under 505. So we couldn't even close above. 505. We pulled right back in it. Didn't quite get up to the week-to-date anchored VWAP, but we got darn near close. By like 20 cents, 30 cents. Sellers keep on stepping in. That's not a good sign, people. They keep selling in. They keep stepping up. You see that? They keep walking price down. So we got to clear this stuff. There's a little bit of a supportive bid right there. I walked in. Another supportive bid, but we need to clear this stuff. They keep walking price down. So to make it easy, I'd just be looking for a potential bounce. And when the bounce happens, then I'm going to use some anchor VWAPs. Maybe it sets up for another move. Maybe it doesn't. Big old pop and drop. A 100-point move. Very quick. Didn't need to catch the whole move. Could have caught 20 points and it would have been good. Yeah, Bookmap's a little pricey. I get it. I have some discounts. I post on like on my links on my YouTube videos. They get like 50% off for like off their service, but you have to pay data for like a year or quarterly. I think you get half off with my partnership with a Bookmap, and then like if you do the monthly, I think it's like 20% off. There's a link on like most of my my YouTube videos. Discord server's not free. It's cheap. I don't charge an arm and a leg. My Discord is $9 a month. This is it right here. $9 a month, and it comes with all this stuff. It's basically set up through Patreon, and then you set up your Discord and you go through there. $9, and then if you buy it for the year, you get 16% off, which ends up being like $7 a month. One that gets out scammers. It gives out. It helps me filter out people that are just trolls, bots, all kinds of crazy stuff. It helps filter that out. But two, it helped me transition to make this free content to move from my full-time career of 13 plus years, even more, darn near 20 years in the telecommunications industry. And it helped me kind of subsidize the cost of that move. Not fully, but it did help subsidize it. And health insurance, dude, it's so expensive. So expensive. So I appreciate everyone that supports the Discord there. It's not an alert service. I make that very clear. There are like an alert thing in there. There's like a bot in there that does alerts, but it's from TradyTix, not from me. Whole move reversed. Whole move. Gross. Looked great. See, now if I would have entered into the rocket ship, it would have been a full-on jinx. Full-on jinx. Still no bounce yet. We're at the opening range, back in the opening range, the first 30 seconds of the market open, and we're tagging the lower range there. Hey, we might be going for that NVIDIA gap. I don't know, man. This is wild price action. Wild price action. You see why I'm sitting on my hands? It would have been nice to catch this, but also now in hindsight, now I look smart for not taking the trade. This could have kept on going and like, dang, you should have took it. But now it's like, okay, I waited 5 minutes and it's already back to where it was. Weekly expected move, lower daily expected move, still beneath us. It's only Tuesday, and this is a very large expected move. We haven't seen this for, I don't know. I mean, October of last year is when we started getting really big expected moves. This one's the biggest one we've seen since probably around that time. And don't get me wrong, this thing could... Market net flow, still all choppy and stuff. Actually, this is starting to creep up here. And even looking at this zero date stuff, it's all over the place. Oh, are you getting happy now? Do you want me to cover? Is that what you're saying? Coco, dude. She's like, I told you, show. I told you to short it. Shut up, kid. Coco's the biggest bear on Wall Street, people. It is what it is. Market net flow is kind of looking bullish. I mean, with this green line going up, but you gotta understand they're under the zero line. They've been under the zero line all day, and it's been back and forth with this flow. I wouldn't consider this bullish, bearish. I'd consider this. I'd consider it. There's not really a good trend here or good edge here to use market net flow. Pretty much for the entire day. It's so obvious when it works, but the entire day we've been saying that it's going to be chop. You know. So if we're going to target lower, I mean, we're still at 50-50, people. That's where that local support was from the market brief from last night that we posted in the Discord, and then also that's just where it's been for a while, 50-50. Volume drying up here a little bit. Saw a lot of volume to the downside, seeing a light little volume move, but we're in the opening range. Could potentially anchor to the swing low here as it's bouncing a little bit. I want to wait for a little bit more strength to do the anchor. I'll wait for a little bit more strength if that's going to be the case. New levels on Bookie. Yeah, getting some supportive stuff over here, but I mean, they keep walking this down. I look, they just added more. They keep on walking it down. This could be, I mean, I don't know if this is the case, but under 50-50, remember, commodity trading advisors have been very, very, very long. So if we start breaking these little triggers on these CTAs, you know, the sell side can get quite intense. Today is a nothing burger so far. I mean, we're down 25 basis points so far, right? It'll be more of a something burger if we actually break down there. Now I'll anchor VWAP since that little move there. So now we'll watch that little swing low. Okay. 50-50 is where we're kind of chopping around at. Chop, chop. Q gamma levels for the day. I can look at 0 date really quick. I can go Qs for you. Got a 433, which can repel price. If we're above it or below it, it can push price away. As far as the magnet goes, it's at like 432. Those are some of the gamma levels from a 0 day perspective based off of TradeTix data. Watching for a potential retag of this swing high anchored VWAP right there. And then we'll see what price does. Oh, yabba dabba doo. Oh, the levels on ESM 24, 50-50 around, would that be around the trade? Yeah, it could be actually. Let me pull it up. 50-50. It could be right around there. Yeah, it could be. It's probably, I'd have to do the math really quick to see like, as far as the points go. I know the math, I can't remember it right now. There's like a way you can just like do a quick math to get an idea, but. Uh-oh. Uh-oh. My computer. Can you guys hear me? Give me a second. I got to charge my mouse. I think my mouse just died. Yeah, take a look at Dow. Do you think that TradeTix is more useful than unusual whales? I like TradeTix. I'm not too familiar with unusual whales. Can I pull up bookmap on IWM? I'll try. My computer just went out, so my mouse is dead. Stupid magic mouse. I have another one somewhere. Give me a second. Let me see if this charges it up. Okay, that gave it a little charge. I might have to juice this thing up a little bit in a moment here. I'm gonna put this up while this is loading. It cracked that swing low. Yeah, this looks gross, people. It looks gross. Remove that because it looks like it's coming back down for another low. Holding that swing low or swing high anchor view up. Back in the opening range, back to 50-50. Chop, chop. Look at where it's been all day. It opened here and we're right here. Chop, chop. Saw a nice big rally right there when Jerome Powell ended, and then it came all back in. Gotta manage risk. Name of the game. Name of the game. Duracell batteries. Okay, I'm gonna zoom in here. I'm gonna charge this up for a second. I'm gonna go run and refresh my water cup. Actually, I'm gonna put a book map while this is loading because I wanna see if there's anything that goes on. So let me do this. Look at this, look at that, look at that, look at that. Look at they just lit that up. You see what they just did there? Bro, watch out. Watch out. This ain't fun. They just keep adding overhead. Careful here. Just let it snap around, let it do its thing. Don't try to outsmart this market. You know what I'm saying? Like, just be careful here. I'm talking to myself basically right now. Well, I haven't traded I haven't traded all day. But, you know, it's not financial advice. I'm just saying. That just lit up like a little, I mean, total algorithm. It's just like all the same algorithm right there. All right, I'm gonna charge my mouse up here really quick, and then I'm gonna run and grab some fresh water and stuff like that. Is this loading? Is my chart moving? I can't tell if my chart's moving or not. There it is. Okay. All right. Be right back. I'm gonna charge this up for a couple minutes. I'm just gonna refresh my water. I'll be right around the corner. Good job, Daniel, on your short. Okay, doke. Okay, doke. Can I run bookmap with IBKR data? My implicit. I'm not too sure I understand the question. Like, I mean, I have interactive brokers, and I have bookmap. Bookmap I have as a separate platform though. It's a separate software. Than IBKR. Dwelton, this is ES. S&P 500 futures. Spoosh. Spoos. Who wins? Golden State Warriors or Kings? Is that game tonight? Yeah. I want to say Kings. I want to say Kings. But, you know. You know. Yeah. This right now, oh, this isn't implicit. This is not only, yeah, I can pull up any stock here on the software. All right, seeing a little bit of a pop here, trying to maybe go for this liquidity up overhead. This swing high anchor VWAP got tagged right there, tested. Look, these moves are crazy, people. Look at that volume right there. You get chopped to smithereens. So we're back to this swing high anchor VWAP there. Did we put a swing low? What happened to the swing low anchor VWAP? Did I remove it? What was the low? I'm gonna do it right there. I'm actually gonna go like this. Let me remove that. I'll do it on this one. Kind of where kind of started moving up higher there. Come on, baby, let's just go all the way back. Why not? This market's crazy. Let's re-party, dude. Oh, Daryl, wait, you don't see it listed as a choice in Bookmap. You're talking about interactive brokers, right? It doesn't integrate into the platform. Are you saying like use interactive broker data? I think that's what you mean, huh? No, I don't know about that. I use DX feed for my data, and Rhythmic. I have both, but I use DX feed basically. DX feed allows you to see like all that stuff. I think that's what you mean. Yeah, today's move is it's wild, and it's also a nothing burger. We're flat on the day. Get in the rocket. Everyone's like, get in the rocket. Do it. I'll have to check that out, Trader Joe. Thanks for sharing. Yeah, so Trader Joe's saying you can use Thinkorswim that's built into Bookmap, and you don't have to pay the separate data feeds. And I think you get ES and Apple for free if you just do the trial. And you can get free data with Thinkorswim, but you have to make sure that you don't sign up as a professional trader. And even if you don't use Thinkorswim, you can still use their platform, but I think you got to put in a few bucks. Like, I don't trade on Thinkorswim, and they close out my account. But I was like, dude, I had everything in there. And then they're like, all right, we'll set it back up again, but put 50 bucks in there. I was like, all right. So I have literally $50 in my Thinkorswim account for like the last year and a half. And I use that platform all the time for like data and stuff like that, and charts. And is it rocket ship time? I don't know. That was a lot of volume right there. That was a lot of volume there. A lot of volume. So let me remove this because that's now taken out. You see what I mean? Why I'm not trading? I'm sorry. Like, I would love to trade here, but I just haven't been, you know, yeah. I mean, take a look at it. This was a clean setup here. You look back, there has been really nothing. Maybe another clean setup will arrive. Just not here yet. We're right around that 505 level still on SPY. Let me see if anything is changing here from a market net flow perspective. I mean, cumulative net premiums for puts are going down. Calls kind of going up here. We are at now almost power hour. Traders are still reaching out further to the downside. 50-15. You know, yesterday I said it'd be crazy if we went to 50-65. Now I'm like, it'd be pretty crazy if we got to 50-15. That'd be crazy if we get to 5100 here. one thing is for certain, we've been in that range that has been identified at the early trading session all day. Yeah, I use Gamma Labs. Trader Chance. Yeah, market net flow is giving us a little something here. It's starting to like diverge a little bit more here. It hasn't been doing that. Still, unfortunately, it's still below that 0 line, which I'd like to see it above the 0 line. But, you know, it is what it is there. Ugh, choppy, chopness. 507 magnet. Okay. Let's go, dude. Take me somewhere, dude. Take me. Can you take me higher? To a place. Rocket. Rocket time? Yeah, right there. I mean, it looks like it's setting up for a rocket. I'll tell you what, we'll get into the rocket ship. We'll get into the rocket ship if. Yeah, look at this volume right here on the upside, and then volume's tightening up here. Let's get in the rocket. Let's do it. Let's do it, and if it breaks down, we'll get out of the rocket. We'll anchor in here at this little swing low. Ladies and gentlemen, your captain speaking. Coco. All right, so if it cracks down through here substantially, then we got to get out of the rocket. We love the rocket. We just want the rocket here. That's all we want to do. How do I delete this? It's not letting me delete it. Let me zoom in. Okay. Come on, people. Oh, wait, we probably should have checked bookmap first. All right, give me a second here. I don't like being under this. Everything's screaming, don't be in the rocket again, Michael. Don't be in the rocket. But we did it. We're here. Trying to get some fuel. Maybe this is our fuel. Maybe we got to go get fuel. Come to me, fuel. Come to me. Don't jinx it with the rocket. I know. I like to actually enter the rocket when it's actually legitimately, but lately it's just been kind of fun just to get in here. You know? Like I said, oh, yeah, there's a little move right down there. We need the red submarine for when price is. So I'm short, so jinx that. It's a little too early for the rocket, but hey, you know, it is what it is. It is what it is. We're floating around this swing high anchor VWAP, and right now we're kind of below. So yeah. Oh, let's take a look here at I gotta remember. Gotta move this to the side a little bit so people can see it. S&P 500 stuff over here to the side, haven't gone anywhere all day. Not rocket ship worthy, but this right here has somewhat of a little consolidation above here. This is it's somewhat rocket ship worthy. Just hold it. Come on now. Let's zoom in. Need rocket ship music. Ground control to Major Mike. Too funny. We are currently in a rocket ship. Sitting at ground level right here on the S&P 500. By ground level, I mean we are quite literally flat on the trading session today. Doing absolutely nothing but chopping around. Volume is contracting right here as we had a nice big move up. So a move will be coming here in the very near future. Whether that's to the upside or downside, I don't really know. Some people want it to be down. Some people want it to be up. Right now I'm in a rocket ship because... just because. There's no really reason. Just because. Coco's going to start barking here in the near future if this thing rips. I have people saying, don't jinx it. No, but jinx it. It's too funny. Jared Jones, yeah, I need a submarine. Yeah, you would think the fuel is underneath us. It's true. But like I have a little fuel in here, so I got to go refuel the stuff, you know? So as the market, as the rocket ship is moving up, I got to go to a new gas station. So I got a little fuel, but I don't know if it's enough to get up there. So if it's not, it's going to go like this. Sound effects and all. Need the thrusters. Thrusters activate.